Applying for a mortgage. I'd like to inquire about getting a mortgage. We're looking to buy our first home.
Congratulations. To assess your eligibility, we'll need some information about your income and credit history.
Okay, what documents do I need to bring in?
Pay stubs for the last 3 months, bank statements, and a copy of your credit report would be a good start.
And what kind of down payment are we typically looking at?
That depends on the loan type. Usually it ranges from 5% to 20% of the property's value.
All right. Thank you. I'll gather those documents and come back next week. Dealing with overdraft fees.
I keep getting overdraft fees. Is there anything I can do to avoid them? Certainly. You can enroll in overdraft protection, which links your savings account to your checking account. How does that work? If your checking account balance is insufficient, we'll automatically transfer funds from your savings account to cover the transaction. Is there a fee for that service? Yes, there's a small transfer fee, but it's usually less than an overdraft fee. Okay, that sounds like a good option. Let's set that up.
Opening a savings account.
Hi, I'm interested in opening a savings account.
Certainly. What are you hoping to save for?
Just general savings, nothing specific yet. What are my options?
We have several accounts with varying interest rates and minimum balances. Let me show you this brochure.
Okay, this premium savings account looks good. What's the annual interest rate?
Currently, it's 2.5% AER. There's also a monthly maintenance fee if the balance falls below $500.
All right, that sounds reasonable. Let's proceed with that one.
Reporting a lost credit card.
I need to report a lost credit card immediately.
I understand. Can you please provide your name and the last 4 digits of the card number?
Sure, it's John Smith, and the last 4 digits are 1234.
Thank you. We've now blocked your card. Were there any unauthorized transactions?
I haven't checked yet. When will I receive a new card?
A replacement card will be mailed to your address on file and should arrive within 7 to 10 business days.
Okay, thank you for your help.
Requesting a loan.
I'm interested in applying for a personal loan.
Okay, what is the purpose of the loan, and how much are you looking to borrow?
It's for home renovations, and I need about $10,000.
All right, we'll need to review your credit score and income to determine the interest rate and repayment terms.
What's the typical interest rate for a loan of that size?
It varies, but currently, it's between 8% and 12%, depending on your creditworthiness.
Okay, I'd like to proceed with the application.
Retirement planning basics.
I'm starting to think about retirement planning. Where do I begin?
That's great. Start by assessing your current financial situation and estimating your future expenses.
What are some common retirement savings options?
401ks, IRAs, and Roth IRAs are popular choices. They offer different tax advantages.
What's the difference between a traditional IRA and a Roth IRA?
With a traditional IRA, contributions are tax-deductible, but withdrawals in retirement are taxed. A Roth IRA is the opposite.
So, it depends on whether I think I'll be in a higher tax bracket now or in retirement?
Setting up online banking.
I want to set up online banking for my account.
Great. Do you have your account number and social security number handy?
Yes, I do.
Okay, visit our website and click on the Enroll Now button. You'll need to create a username and password.
What security measures do you have in place?
We use multi-factor authentication, including security questions and one-time passcodes sent to your phone.
That sounds secure. I'll give it a try.
Transferring money internationally.
I need to transfer money to a bank account in Germany.
Certainly. You'll need the recipient's name, address, bank name, and SWIFT code.
Okay, I have all that information. What are the fees involved?
The fee is usually a flat rate plus a percentage of the transfer amount. It depends on the currency exchange rate too.
What's the exchange rate for euros today?
Currently, it's €1 to 1.08 US dollars.
All right, let's proceed with the transfer.
Understanding credit scores.
I'm trying to improve my credit score. What factors influence it the most?
Payment history is the biggest factor, followed by amounts owed, length of credit history, new credit, and credit mix.
So paying bills on time is crucial?
Absolutely. Even one late payment can negatively impact your score.
What about credit utilization? How much of my available credit should I use?
Ideally, keep it below 30% of your credit limit on each card.
That's good to know. Thanks for the information.
Understanding investment options. I'm interested in learning more about investment options. I have some money I'd like to grow.
Great. What's your risk tolerance and investment timeline?
I'm relatively risk averse and looking for long-term growth, maybe 10 to 15 years.
In that case, you might consider mutual funds or ETFs focused on diversified stocks and bonds.
What's the difference between those?
Mutual funds are actively managed, while ETFs are passively managed and usually have lower fees.
That's helpful. I'll do some more research based on that. Discussing loan prepayment strategies.
I have a car loan and I'm trying to pay it off faster. What's the best way to do that?
There are a few strategies. You could make extra principal payments each month. Even small amounts can make a difference.
Would that reduce the total interest I pay?
Yes. By paying down the principal faster, you'll accrue less interest over the life of the loan.
What about making bi-weekly payments?
That's another good option. It's essentially like making one extra monthly payment per year, which can significantly shorten the loan term.
I'll look into both options. Thanks for the advice.
Discussing the advantages of using a financial planner. I'm considering hiring a financial planner, but I'm not sure if it's necessary. What are the biggest benefits?
A good planner can help you create a comprehensive financial plan, covering everything from budgeting to retirement to estate planning.
I can do some of that myself, though.
True, but they have expertise and can provide objective advice, especially in complex situations. They can also keep you accountable.
So it's like having a financial coach?
In a way, yes. They can help you make informed decisions and stay on track to achieve your financial goals.
That sounds helpful. I'll look into finding a reputable one.
Definitely do your research and check their credentials. Discussing the benefits of automatic bill payment.
I'm constantly forgetting to pay bills on time. I'm thinking of setting up automatic bill payments. Is it a good idea?
It's a great way to avoid late fees and potential damage to your credit score. It also saves you time and effort.
What if I don't have enough money in my account when the payment is due?
You'll want to make sure you have sufficient funds or set up overdraft protection to avoid overdraft fees. Also, some companies send reminders before automatic payments.
Can I cancel automatic payments if I need to?
Yes, you can typically cancel or modify them through your bank or the biller's website. Just make sure you do it before the payment is processed.
That sounds convenient. I'll definitely look into it.
Discussing the importance of reviewing credit reports regularly.
I keep hearing about the importance of checking my credit report. Is it really that crucial? Absolutely. It's essential for identifying errors or fraudulent activity that could negatively impact your credit score. How often should I be checking it? You're entitled to a free credit report from each of the 3 major credit bureaus, Equifax, Experian, TransUnion, annually, so at least once a year. Some people check one every 4 months. And if I find an error, what should I do? You'll need to dispute the error with the credit bureau that issued the report. They'll investigate and correct it if necessary. Good to know. I'll make sure to check mine soon.
Discussing the process of obtaining a mortgage pre-approval. I'm thinking of buying a house soon. Should I get pre-approved for a mortgage first?
Absolutely. Getting pre-approved gives you a clear idea of how much you can afford and strengthens your offer when you find a house.
What information do they need for pre-approval?
They'll typically ask for proof of income, bank statements, credit history, and information about your debts.
Is it a long and complicated process?
It can take a few days to a week, depending on the lender and how quickly you provide the required documents.
Okay, that doesn't sound too bad. I'll start gathering my documents. Understanding the impact of credit card debt on financial goals.
I'm struggling to save for a down payment on a house because of my credit card debt. It feels like I'm constantly treading water.
High-interest credit card debt can really hinder your progress. The interest charges eat away at your savings potential.
Exactly. It's a vicious cycle.
Have you considered strategies like the debt snowball or debt avalanche to tackle it?
I've heard of those. The snowball is paying off the smallest balances first, right?
Yes, and the avalanche focuses on the highest interest rates first, which can save you more money in the long run.
I think I'll try the avalanche method. Every little bit helps.
Understanding the impact of identity theft protection services.
I'm thinking of signing up for an identity theft protection service. Are they really worth the money? It depends on your risk tolerance and how much time you're willing to spend monitoring your accounts yourself. They can be helpful for early detection. What kind of services do they typically offer? Credit monitoring, dark web surveillance, identity restoration assistance, and sometimes even insurance to cover expenses related to identity theft. So they don't prevent identity theft, just help you deal with it after it happens? Exactly. They provide a safety net and tools to recover faster. That makes sense. I'll have to research different providers and compare their offerings.
Understanding the implications of co-signing a loan. My friend asked me to co-sign a loan for them. I'm hesitant. What are the risks involved?
Co-signing means you're equally responsible for the debt. If your friend defaults, you're on the hook for the entire amount, including interest and fees.
So it could affect my credit score if they don't pay.
Definitely. Late payments or defaults will show up on your credit report and could lower your score.
That's a huge risk. I'm not sure I want to do that.
It's important to carefully consider your friend's financial situation and your own ability to repay the loan if necessary.
I think I'll have to decline. It's too risky for me.
Understanding the importance of diversification.
I've been putting all my investment money into one stock that I think will do really well. Is that a smart strategy?
While that stock might perform well, it's generally not a good idea to put all your eggs in one basket. Diversification is key to managing risk.
What does diversification mean exactly?
It means spreading your investments across different asset classes, industries, and geographic regions. This way, if one investment performs poorly, it won't have a devastating impact on your overall portfolio.
So I should invest in stocks, bonds, and maybe real estate?
That's a good start. You can also diversify within each asset class. For example, invest in different types of stocks and bonds.
Okay, I get it. I need to spread the risk around.
Exactly. Diversification helps protect your portfolio from unexpected losses.
Understanding the risks and rewards of investing in bonds.
I'm looking to diversify my investment portfolio. Are bonds a good option?
Bonds are generally considered less risky than stocks, offering a more stable return. They can provide income and help balance your portfolio.
What are the main risks associated with bonds?
Interest rate risk is a big one. If interest rates rise, the value of your bonds may decline. There's also credit risk, the risk that the issuer might default.
So it's important to choose bonds from reputable issuers?
Exactly. Credit ratings can help you assess the issuer's creditworthiness.
Thanks, that's helpful. I'll do some more research on different types of bonds.
Choosing a checking account. I'm looking to switch checking accounts. What features should I prioritize?
Think about your needs. Do you need a lot of ATM access, or do you mostly use debit cards?
Mostly debit cards, and I rarely use ATMs.
Then look for an account with low or no monthly fees and no minimum balance requirements. Online access is crucial too.
Good point about online access. What about overdraft protection?
Definitely consider overdraft protection. Some banks offer free transfers from savings, which is ideal.
Thanks for the advice. I'll keep those points in mind. Discussing credit card security.
I'm worried about credit card fraud. What are some ways to protect myself?
Regularly check your credit card statements for unauthorized transactions.
I do that, but what else?
Use strong, unique passwords for your online accounts and enable two-factor authentication whenever possible.
Two-factor authentication, got it. Anything else?
Be cautious about clicking on links in emails or texts, especially if they ask for personal information, and consider using a credit monitoring service.
Those are great tips. Thanks.
Discussing savings goals.
I'm having trouble saving money. Any tips?
Start by setting specific, measurable, achievable, relevant, and time-bound SMART goals.
SMART goals. Can you give me an example?
Sure. Instead of saying I want to save money, say I want to save $500 per month for a down payment on a house in 2 years.
That makes a lot more sense. What else?
Automate your savings by setting up regular transfers from your checking account to your savings account. And track your spending to identify areas where you can cut back.
Automated transfers are a great idea. Thanks. Evaluating a bank's mobile app.
I'm thinking about switching banks. How important is a good mobile app?
Extremely important. A good mobile app allows you to manage your accounts, transfer money, pay bills, and even deposit checks remotely.
What features should I look for specifically?
Look for features like mobile check deposit, bill pay, the ability to set up alerts for low balances or unusual activity, and easy access to customer support.
Alerts for unusual activity sound really useful.
They are. And check App Store reviews to see what other customers are saying about the app's reliability and ease of use.
Great idea. I'll do that.
Planning for a large purchase.
I need to buy a new car, but I'm not sure how to finance it.
Have you considered getting pre-approved for a car loan?
No, I haven't. What are the benefits?
It gives you a better idea of how much you can borrow and what your interest rate will be, so you can negotiate better with the dealer.
That sounds smart. Should I check with my bank or a credit union?
Shop around, check with both banks and credit unions to see who offers the best rates. Also, research online lenders.
Okay, I will definitely compare rates, thanks.
Reviewing a financial statement.
I received my investment statement, but I'm not sure what I'm looking at.
The key things to look for are your portfolio's performance, asset allocation, and any fees you've been charged.
Asset allocation? What's that?
It shows how your investments are divided among different asset classes, like stocks, bonds, and real estate.
Okay, I see that section. What should I be looking for there?
Make sure it still aligns with your risk tolerance and investment goals. If you're nearing retirement, you might want a more conservative allocation.
That's a good point. I'll review it carefully. Understanding banking jargon.
I'm trying to understand my bank statement, but some of the terms are confusing. What exactly is APR?
APR stands for annual percentage rate. It's the interest rate for a whole year rather than just a monthly fee applied to things like loans or credit cards.
Okay, that makes sense. What about APY?
APY is annual percentage yield. It takes into account the effect of compounding interest, so it's usually a bit higher than the APR.
So APY is better for savings accounts?
Exactly. You want a higher APY on your savings and a lower APR on your loans.
Thanks. That clarifies things a lot.
Understanding credit card interest.
I'm trying to pay down my credit card debt, but the interest is killing me. How does it actually work?
Credit card interest is calculated daily on your average daily balance. So the higher your balance, the more interest you'll accrue.
Daily? That's rough. So paying it down quickly is key?
Exactly. The faster you pay it down, the less interest you'll pay overall. Try to pay more than the minimum.
I'll try to. What about balance transfers?
A balance transfer to a card with a lower or 0% introductory APR can save you a lot of money on interest, but watch out for transfer fees.
Good to know. I'll look into that.
Understanding investment risk.
I want to start investing, but I'm nervous about losing money.
That's understandable. Every investment carries some risk. It's important to understand your risk tolerance.
Risk tolerance? What's that?
It's how much you're willing to potentially lose in exchange for higher potential returns. Are you comfortable with big swings in value, or do you prefer more stable investments?
I definitely prefer more stable investments.
Then you might want to consider lower risk options like bonds or dividend-paying stocks, or a diversified portfolio.
Okay, that makes sense. Thanks for explaining that.
Understanding loan amortization.
I'm trying to understand my mortgage amortization schedule. It's confusing.
An amortization schedule shows how much of each payment goes towards principal and interest over the life of the loan.
So in the beginning, am I paying mostly interest?
Yes, in the early years, a larger portion of your payment goes towards interest. As you pay down the principal, more of your payment goes towards that.
Is there a way to change that?
Making extra principal payments can significantly reduce the amount of interest you pay overall and shorten the loan term.
Okay, that's good to know. Thanks. Budgeting for financial goals.
I'm struggling to save for my goals. How can I create a realistic budget?
Start by tracking your income and expenses for a month or two. This will give you a clear picture of where your money is going.
Then what?
Categorize your expenses as fixed, rent, utilities, and variable, groceries, entertainment. Identify areas where you can cut back.
How much should I be saving?
Aim to save at least 15% of your income, but even a smaller amount is better than nothing. Automate your savings to make it easier.
Automate? How?
Set up automatic transfers from your checking account to your savings account each month.
Choosing a credit card.
I'm thinking about getting a new credit card, but I'm overwhelmed by all the options. It can be confusing. What are you hoping to get out of it? Rewards, low interest, or something else? Rewards would be nice, maybe for travel or cash back. Then look for cards with good rewards programs in those areas. Pay attention to the APR and annual fees too. APR? What's a good APR? Ideally, you want the lowest APR possible, especially if you carry a balance. But rewards cards often have higher APRs. Okay, so balance rewards against interest. Got it. Exactly. And always pay your balance on time to avoid interest charges altogether.
Investing in mutual funds?
I'm thinking about investing in mutual funds. What are the main things I should consider?
First, consider your risk tolerance and investment goals. Then, look at the fund's expense ratio and past performance.
What's an expense ratio?
It's the annual fee charged to manage the fund. Lower is generally better.
And past performance? Does that guarantee future returns?
Past performance is no guarantee of future results, but it can give you an idea of how the fund has performed in different market conditions.
Are there different types of mutual funds?
Yes, there are stock funds, bond funds, and balanced funds, among others. Choose one that aligns with your risk tolerance. Managing debt.
I'm feeling overwhelmed by my debt. Where do I even start?
First, list all your debts, including the interest rates and minimum payments.
Then what?
You can choose either the debt snowball method, paying off the smallest debt first, or the debt avalanche method, paying off the highest interest debt first.
Which is better?
Avalanche saves you more money on interest in the long run, but snowball can provide quick wins for motivation.
That makes sense. I think I'll try the snowball method to start.
Great. Consistency is key. Even small extra payments can make a big difference.
Planning for large purchases.
I'm saving up for a down payment on a house. What's the best way to manage my savings?
That's great. A high-yield savings account is a good start. Consider a money market account for even slightly better rates.
Are those accounts safe?
Yes, as long as they're FDIC insured. Make sure your total deposits at each institution are below the insured limit.
Should I invest any of it?
Investing for a short-term goal like a down payment is generally not recommended due to the risk of losing money.
Okay, so stick with savings accounts for now. Thanks.
Securing a personal loan.
I need to take out a personal loan for some home renovations. What should I be aware of?
Shop around for the best interest rate and loan terms. Your credit score will significantly impact the rate you receive.
What's considered a good interest rate?
It depends on the current market and your creditworthiness, but aim for the lowest rate possible. Compare offers from multiple lenders.
Are there any fees I should watch out for?
Yes, origination fees, prepayment penalties, and late payment fees are common. Read the fine print carefully.
What if I can't make a payment?
Contact the lender immediately to discuss your options. They might be able to offer a temporary forbearance or payment plan.
Understanding banking fees.
I'm a bit confused about all the fees my bank charges. What are the most common ones? Well, common ones include monthly maintenance fees, ATM fees for using out-of-network ATMs, and overdraft fees. Overdraft fees seem particularly high. Is there a way to avoid them? Definitely. You can link your checking account to a savings account for overdraft protection, or sign up for overdraft services. What's the difference between overdraft protection and overdraft services? Overdraft protection transfers money from your savings, while overdraft services allow the transaction to go through, but with a fee. That's helpful. I'll look into overdraft protection. Thanks.
Understanding CD rates.
I'm thinking of putting some money into a certificate of deposit, CD. How do I know I'm getting a good rate?
Compare CD rates at different banks and credit unions. Online banks often offer higher rates.
Are longer terms always better for higher rates?
Not necessarily. Sometimes shorter terms offer competitive rates. Check current market trends.
What about the risk of needing the money before the term is up?
That's a key consideration. Early withdrawal penalties can eat into your earnings. Only invest money you won't need.
Good point. I'll shop around and consider the term length carefully.
Understanding credit reports.
I've heard I should check my credit report regularly. Why is that so important?
It's crucial for identifying errors or fraudulent activity that could negatively impact your credit score.
Where can I get my credit report?
You can get a free credit report from each of the 3 major credit bureaus, Equifax, Experian, and TransUnion, annually at annualcreditreport.com.
What should I look for when reviewing it?
Verify your personal information, account balances, payment history, and any inquiries you didn't authorize.
And what if I find an error?
You can dispute the error with the credit bureau and the creditor involved.
Understanding home equity.
I keep hearing about home equity. What exactly is it?
Home equity is the difference between the current market value of your home and the amount you still owe on your mortgage.
So, if my house is worth $300,000 and I owe $200,000, my equity is $100,000.
Exactly. You can borrow against that equity using a home equity loan or a home equity line of credit, HELOC.
What are the risks involved?
If you can't repay the loan, you could lose your home to foreclosure. Also, HELOC rates are often variable, so your payments could increase.
That's a big risk. I need to consider that carefully.
Discussing the impact of government regulations on the banking industry, I'm reading about new government regulations for banks. How do these regulations actually affect us, the consumers?
They can affect many things, from loan availability and interest rates to the fees banks charge and the security of our deposits.
So stricter regulations are always better for consumers?
Not necessarily. Stricter regulations can sometimes make it harder for banks to lend money, which could limit access to credit.
What about things like deposit insurance? Is that a regulation?
Yes, FDIC insurance is a key regulation. It protects our deposits up to a certain amount if a bank fails.
That's reassuring. So regulations can both protect us and potentially limit our options?
Precisely. It's a balancing act between protecting consumers and allowing banks to operate efficiently.
Discussing the pros and cons of peer-to-peer payment apps.
I've been using peer-to-peer payment apps a lot lately. They're so convenient.
They are. But are you aware of the potential risks involved?
I know there's always a risk, but what should I be particularly careful about?
Scams are a big one. Be sure you know who you're sending money to before you hit send.
Good point. What else?
Many apps don't offer the same fraud protection as credit cards. If you're scammed, it can be difficult to get your money back.
That's concerning. I'll definitely be more cautious. Are there any advantages besides convenience?
They're usually free to use for personal transactions, and they're often much faster than traditional methods like checks.
Discussing the role of a financial planner.
I'm thinking of hiring a financial planner. Do you think it's worth the cost?
It depends on your situation and goals. What are you hoping to achieve?
I'm feeling overwhelmed with managing my investments and planning for retirement.
A good financial planner can help you create a comprehensive plan, manage your assets, and provide expert advice.
What should I look for in a financial planner?
Look for someone who is certified, experienced, and has a fiduciary duty to act in your best interest.
Fiduciary duty? What does that mean?
It means they are legally obligated to put your interests ahead of their own.
Evaluating the benefits of a high-yield checking account.
I saw an advertisement for a high-yield checking account. Are those actually worth considering?
They can be, depending on your spending habits and how much money you keep in your checking account.
What are the main benefits?
The biggest benefit is earning interest on your checking balance, which is something traditional checking accounts rarely offer.
Are there any drawbacks?
Often, they require you to maintain a high minimum balance or meet certain transaction requirements to earn the high yield.
So if I don't meet those requirements, I won't get the advertised interest rate?
Exactly. You might earn a much lower rate or even no interest at all. Read the fine print carefully.
Navigating bank account reconciliation. I'm trying to reconcile my bank statement, but it's not matching my records. Any tips?
Start by comparing each transaction in your statement to your checkbook or accounting software.
I've done that, but there's still a difference.
Look for outstanding checks or deposits that haven't cleared yet. Those are common culprits.
Right, I'll check for those. What else could it be?
Also check for bank errors or any fees you might have missed. Sometimes those are the cause.
Okay, I'll meticulously go through everything again. Thanks for the suggestions.
No problem. It can be tedious, but it's important to keep your records accurate. Understanding credit card grace periods.
I'm a little confused about my credit card statement. What exactly is a, quote, grace period? It's the time you have to pay your balance in full after the billing cycle ends, without being charged interest. So if I pay the full amount within that period, I avoid interest charges? Exactly. But if you carry a balance over, you'll be charged interest from the date of the purchase. That makes sense. How long is the typical grace period? It usually ranges from 21 to 25 days, but it's best to check your card agreement. Okay, I'll look into that. Thanks for clarifying.
Understanding the concept of time value of money.
I keep hearing about the time value of money. What does that really mean?
It means that money available today is worth more than the same amount in the future.
Why is that?
Because you can invest it and earn a return, or because inflation erodes its purchasing power over time.
So, $100 today is better than $100 in a year?
Exactly. If you invest that $100 today, it could be worth more than $100 in a year, even after inflation.
That makes sense. So it's important to consider when making financial decisions?
Absolutely. It's crucial for things like retirement planning, loan decisions, and investment analysis. Understanding the difference between debit and credit cards.
What's the fundamental difference between using a debit card and a credit card?
A debit card uses money directly from your bank account, while a credit card is a short-term loan.
So, With a credit card, I'm borrowing money?
Exactly. You're borrowing money from the credit card issuer and you have to pay it back, usually with interest.
Are there any advantages to using a credit card over a debit card?
Credit cards can help you build credit history and often offer rewards or cashback. They also offer better fraud protection.
That makes sense. But debit cards are safer from overspending, right?
Yes, with a debit card, you can only spend what you have in your account, avoiding debt.
Understanding the risks of co-signing a loan.
My friend asked me to co-sign a loan for them. I'm hesitant, but I want to help.
Co-signing is a big responsibility. Are you aware of the potential risks?
I know I'd be responsible if they can't pay, but what does that really mean?
It means you're legally obligated to pay back the entire loan amount, including interest and fees, if they default.
Even if I only agreed to co-sign a portion of it?
No, you are responsible for the entire amount. It can also negatively impact your credit score if payments are missed.
Wow, that's serious. I need to think carefully about this.
Definitely. Only co-sign if you're absolutely confident they can repay the loan, and you're prepared to pay it yourself if necessary.
Understanding the risks of day trading.
I've been thinking about trying day trading. Seems like a quick way to make money.
It can be, but it's also extremely risky. Are you aware of the potential downsides?
I know it's not guaranteed, but what specifically makes it so risky?
High leverage, quick decisions, and market volatility can lead to significant losses very quickly.
Leverage? I'm not sure I understand that.
It's essentially borrowing money to amplify your trades. It can magnify gains, but also losses.
So it's easy to lose more than I initially invested?
Precisely. Day trading requires a lot of knowledge, discipline, and a high risk tolerance.
Discussing the benefits of a Roth IRA.
I'm looking into retirement accounts. I've heard about Roth IRAs. What's the big deal?
With a Roth IRA, you contribute after tax money, but your earnings and withdrawals in retirement are tax-free.
So I pay taxes now, but not later?
Correct. That's beneficial if you expect to be in a higher tax bracket in retirement.
Are there income limitations to contribute?
Yes, there are. You'll need to check the current IRS guidelines to see if you qualify based on your income.
Okay, that's good to know. I'll look into the income limits and see if a Roth IRA is right for me.
Another benefit is that you can withdraw your contributions, not earnings, at any time, tax and penalty free.
Discussing the impact of a debt-to-income ratio.
I'm trying to get a loan, and they keep mentioning my debt-to-income ratio. What is it?
It's your monthly debt payments divided by your gross monthly income. Lenders use it to assess your ability to repay a loan.
So a lower ratio is better?
Yes, absolutely. A lower DTI indicates that you have more disposable income and are less likely to default.
What's considered a good DTI?
Generally, below 36% is considered good, and anything above 43% might raise red flags with lenders.
Okay, I need to calculate mine and see where I stand. Thanks for the explanation.
You can improve your DTI by either increasing your income or reducing your debt.
Discussing the importance of regularly updating beneficiaries.
I just opened a retirement account. They asked for beneficiaries. Is that really important?
Absolutely. Your beneficiary is who will inherit the assets in your account if you pass away. It's crucial to keep this information up to date.
Why is it so important to update it?
Life changes. Marriages, divorces, births, and deaths can all impact who you want to receive your assets. Outdated beneficiaries can lead to unintended consequences and legal battles.
So, if I get married, I should update my beneficiary forms?
Yes, and after a divorce, you might want to remove your ex-spouse. It's a good idea to review your beneficiaries at least once a year, or whenever a major life event occurs.
Okay, I'll make sure to set a reminder to review them regularly. Thanks for the heads up.
Discussing the merits of fee-only financial advisors.
I'm thinking about getting a financial advisor. I see some are fee-only. What does that mean?
Fee-only advisors charge a direct fee for their services, either hourly, a flat fee, or a percentage of assets under management. They don't receive commissions from selling financial products.
So, they're not incentivized to sell me anything I don't need.
Exactly. Their recommendations are supposed to be based solely on your best interests, not on earning a commission.
Are other advisors commission-based?
Yes, some are. They earn commissions on the products they sell, which can create a potential conflict of interest.
So, a fee-only advisor is more likely to provide unbiased advice.
That's the general idea. It helps ensure their advice is aligned with your financial goals rather than their own earnings.
Discussing the pros and cons of balance transfers.
I have a lot of credit card debt. I've been seeing ads for balance transfers. Are they worth it?
A balance transfer moves your debt from one credit card to another, often with a lower or 0% introductory APR.
That sounds great. What's the catch?
There's usually a balance transfer fee, typically a percentage of the amount transferred, and the low APR is only for a limited time.
So if I don't pay it off before the introductory period ends, the interest rate goes up.
Precisely. And it could be higher than your original rate. You also need to make sure you don't start racking up new charges on the old card.
Okay, so it's only beneficial if I can pay off the transferred balance during the introductory period and avoid accumulating more debt?
Exactly. It's a tool, not a magic solution. Discipline is key. Understanding collateralized loans.
I'm considering a secured loan, but I'm not entirely sure what it entails.
Essentially, it means you're offering an asset, like a car or house, as collateral to guarantee the loan. If you can't repay, the lender can seize the asset.
So the lender has more security and I potentially get better terms?
Exactly. Lower interest rates are common with collateralized loans.
What if the asset's value depreciates during the loan term?
That's something to consider. If the asset's value falls significantly below the loan amount, you might be required to provide additional collateral or face other consequences.
That's a good point. I'll need to research the potential depreciation of the asset I'm considering using as collateral. Understanding credit freeze versus credit lock. I'm worried about identity theft. I've heard about credit freezes and locks. What's the difference?
A credit freeze restricts access to your credit report, making it difficult for someone to open new accounts in your name. It's free and mandated by law.
And a credit lock?
A credit lock is similar, but it's offered by the credit bureaus themselves. It's often easier to temporarily lift than a freeze, but some bureaus may charge a fee.
So a freeze is legally protected and free, while a lock might have fees and be easier to manage?
Exactly. Both prevent access to your credit report, but the mechanisms and protections differ slightly.
I think I'll go with a freeze then, since it's free and legally protected. Thanks for clarifying. Understanding the implications of co-signing a loan.
My friend asked me to co-sign a loan for them. I want to help, but I'm a little hesitant.
Co-signing means you're legally responsible for the loan if your friend can't make the payments. It's a serious commitment.
So if they default, I'm on the hook?
Yes, the lender will come after you for the remaining balance, including interest and fees.
Will it affect my credit score?
Yes, the loan will appear on your credit report, and any missed payments will negatively impact your score. It could also affect your ability to get loans in the future.
That's a lot to consider. I need to think long and hard about this before making a decision.
Definitely. Only co-sign if you're willing and able to repay the loan yourself. Understanding the purpose of escrow accounts.
I'm buying a house and they're talking about an escrow account. What is that for?
An escrow account is set up to hold funds for property taxes and homeowners insurance. The lender collects these payments along with your mortgage payment.
So, it's like a savings account specifically for those expenses?
Yes, the lender manages the account and pays the property taxes and insurance premiums on your behalf, ensuring they're paid on time.
Why don't I just pay those myself?
Lenders prefer to manage it to reduce the risk of you failing to pay those crucial expenses, which could lead to foreclosure if unpaid.
That makes sense. So it protects both me and the lender?
Exactly. It provides a level of security for everyone involved.
Understanding the risks of margin trading.
I'm getting into investing, and I've heard about margin trading. It sounds like a way to make bigger profits. What's the deal?
Margin trading involves borrowing money from your broker to increase your purchasing power. It can amplify gains, but also amplify losses.
So, it's like a loan for investing?
Yes, but it's very risky. If your investments perform poorly, you could lose more than your initial investment.
What happens if my investments lose value quickly?
You could receive a margin call, requiring you to deposit more funds or sell your assets to cover the losses.
Wow, that sounds stressful. It's definitely not for beginners then.
Definitely not. It requires a high level of knowledge and risk tolerance. You need to understand how leverage works and be prepared for significant losses.
Applying for a personal line of credit.
I'm interested in applying for a personal line of credit. All right. What do you plan to use the line of credit for? Mostly for unexpected expenses and home repairs. Okay. Do you know roughly how much you'd like to have available? I was thinking around $10,000 would be sufficient. I'll need to pull your credit report and review your income to determine eligibility and interest rates. What's the typical interest rate for a line of credit like that? It varies depending on your credit score, but I can give you a better idea once I have your information.
Discussing high-yield savings account options.
I'm looking for a better return on my savings. I've heard about high-yield savings accounts. Yes, we offer several high-yield savings options. They typically offer significantly higher interest rates than traditional savings accounts. What are the requirements for opening one? Usually, there's no minimum balance requirement, but some accounts might offer higher rates for larger balances. Are these accounts FDIC insured? Yes, all of our savings accounts, including the high-yield options, are FDIC insured up to $250,000 per depositor per insured bank. What's the difference between a high-yield savings account and a money market account? Money market accounts often come with check writing privileges and slightly higher rates, but may also have higher minimum balance requirements.
Discussing loan prepayment options.
I'm considering making extra payments on my auto loan. Are there any penalties for prepayment?
That's a great idea. There are no prepayment penalties on your loan. Any extra payment will go directly towards the principal.
So how does that impact the overall loan term?
By paying extra towards the principal, you'll reduce the amount of interest you pay over the life of the loan and shorten the repayment period.
Is there a specific amount I should aim to pay extra each month?
That depends on your budget, but even a small extra amount can make a significant difference over time. We can calculate the estimated savings for you.
Okay, let's do that. I'm thinking of adding an extra $100 per month.
Exploring options for debt consolidation. I have several high-interest credit cards, and I'm struggling to keep up with the payments. I'm looking into debt consolidation.
I understand. We have a few options. We could explore a personal loan for debt consolidation, or potentially a balance transfer to a lower interest credit card.
What are the pros and cons of each?
A personal loan offers a fixed interest rate and a set repayment schedule, making budgeting easier. A balance transfer card might offer a 0% introductory rate, but that rate will eventually increase.
What kind of credit score would I need for either option?
For a personal loan with a favorable rate, you generally need a good to excellent credit score. Balance transfer cards can also be competitive, requiring a good score.
Okay, I'll need to check my credit score then. Thanks for the information. Opening a joint account.
Hi, we're interested in opening a joint checking account.
Certainly. What documents do you both have with you for identification and proof of address?
We both have our driver's licenses and a utility bill with both our names on it.
Perfect. Will this be a joint with survivorship account?
Yes, that's what we want. So if one of us passes away, the other automatically gets the funds?
Exactly. It simplifies things considerably. I'll just need you both to fill out these forms.
Okay, great. And what are the fees associated with this type of account?
Questioning a bank service charge.
I noticed a $15 service charge on my account statement. Can you explain what it's for?
Certainly. Let me take a look. It appears to be a monthly maintenance fee.
I wasn't aware of a monthly fee. Is there a way to avoid it?
Yes. You can avoid the fee by maintaining a minimum daily balance of $500 or by having direct deposit.
I usually have more than $500 in my account. Why was I charged this month?
Let me investigate further. It seems there was a day where your balance dipped below $500. I can waive the fee this time as a courtesy.
Thank you, I appreciate that. I'll be sure to keep a closer eye on my balance.
Reviewing beneficiary designations. I'd like to review the beneficiaries listed on my accounts.
Certainly. Let's pull up your account information. Which accounts are you concerned about?
All of them, really. It's been a while since I've checked.
Okay, I see your current beneficiaries listed as your spouse and children. Are these designations still accurate?
My spouse is still correct, but I'd like to update the percentages for my children. One of them has passed away.
I'm sorry to hear that. We can update the designations accordingly. You'll need to fill out a new beneficiary form.
Can I do that online, or do I need to come into the branch?
Reviewing investment portfolio performance.
Hi, I'd like to review the performance of my investment portfolio with you. Of course. Let's pull up your account. Overall, how do you feel about the risk level and return so far? I'm a bit concerned about the recent market volatility. I'm not sure if I should adjust my strategy. I understand. Let's discuss your current asset allocation and see if it still aligns with your goals and risk tolerance. Okay, that sounds good. I'm mostly concerned with long-term growth for retirement. Then we should consider rebalancing to ensure we're still on track for that, even with the recent fluctuations. What are the potential downsides to rebalancing now?
Understanding CD rollover options.
My certificate of deposit is maturing next month. What are my options for rollover?
We can automatically roll it over into a new CD at the current interest rate, or you can withdraw the funds.
What are the current interest rates for different CD terms?
Let me check. For a 1-year CD, it's currently at X%, and for a 3-year, it's at Y%.
Is there any penalty for withdrawing some of the funds and rolling over the rest?
Yes, there would be an early withdrawal penalty on the amount you take out before maturity.
Okay, I think I'll just roll it all over into a new 1-year CD then, thanks.
Understanding mobile banking security features.
I'm a bit hesitant to use mobile banking. How secure is it?
We utilize several security measures, including encryption, multi-factor authentication, and fraud monitoring.
What is multi-factor authentication?
It means you'll need more than just your password to log in. For example, a code sent to your phone or email.
What if my phone is lost or stolen?
You should immediately contact us to disable mobile banking access on that device. You can also remotely wipe the data from your phone if you have that feature enabled.
Okay, that's reassuring. Are there any precautions I should take on my end?
Yes. Always use a strong password. Avoid using public Wi-Fi for sensitive transactions. And keep your phone's operating system and our app updated.
Analyzing the impact of debt consolidation.
I'm drowning in debt from multiple sources. I've been hearing about debt consolidation, but I'm not sure if it's right for me. Debt consolidation combines multiple debts into a single loan, ideally with a lower interest rate. Sounds good. What are the benefits? Simpler payments, potentially lower interest rates, and a fixed repayment schedule. It can also improve your credit score if you manage it well. Are there any downsides? You might end up paying more interest in the long run if the repayment term is longer. Also, some consolidation loans come with fees. Okay, so I need to compare the overall cost and make sure I'm disciplined with my spending. Precisely. It's not a magic bullet if you keep racking up debt.
Discussing the benefits of a rewards credit card.
I'm thinking about getting a rewards credit card. Are they really worth it?
Rewards credit cards offer perks like cashback, points, or miles for your spending.
Sounds good, but what's the catch?
They often have higher interest rates than non-rewards cards, so if you carry a balance, the interest charges can outweigh the rewards.
So I should only get one if I pay my balance in full each month?
That's the best way to maximize the benefits. Also, look for cards with rewards that align with your spending habits.
Okay, so if I travel a lot, a travel rewards card might be a good fit.
Exactly. And compare the rewards rates, annual fees, and other perks before choosing a card. Discussing the implications of a variable interest rate.
I'm looking at a loan with a variable interest rate. I'm a bit nervous about it.
Variable rates can be tricky. They fluctuate based on a benchmark rate, like the prime rate.
So my payments could go up or down.
Exactly. If the benchmark rate increases, your interest rate and payments will increase. If it decreases, they'll decrease.
What determines if it is a good option?
It depends on your risk tolerance and expectations for interest rate movements. If you think rates will stay low or decrease, it could be beneficial. But if you're risk-averse, a fixed rate might be better.
That makes sense. I'll need to consider my financial situation and the economic outlook.
Discussing the importance of regularly updating beneficiaries.
I was just reviewing my accounts, and I realized I haven't updated my beneficiaries in years.
That's a good thing to check. Beneficiaries are the people who will inherit your assets if you pass away.
Why is it so important to keep them updated?
Life changes, right? You might get married, divorced, have children, or experience the death of a beneficiary. If your beneficiary designations aren't current, your assets might not go where you intend.
That makes sense. What kind of accounts typically have beneficiaries?
Retirement accounts like 401ks and IRAs, life insurance policies, and investment accounts.
Okay, I'll make sure to review all of those and update them as needed.
Good idea. It's a simple step that can prevent a lot of headaches for your loved ones later on.
Evaluating the risks and rewards of investing in real estate investment trusts, REITs.
I'm thinking about diversifying my portfolio. What do you know about REITs?
REITs are real estate investment trusts. They own and manage income-producing real estate.
So how do they work as an investment?
They generate income from rents and property sales, and they're required to distribute a large portion of their taxable income to shareholders as dividends.
High dividends sound good, but what are the risks?
They can be sensitive to interest rate changes and the overall real estate market. Also, management fees can eat into returns.
Okay, so it's not a guaranteed win. Diversification is key, as always.
Exactly. Do your research on the specific REIT before investing. Understanding the benefits of direct stock purchase plans, DSPPs.
I've been reading about direct stock purchase plans. Have you ever looked into them?
A little. Aren't those plans where you can buy stock directly from the company?
Exactly. No broker needed, potentially lower fees, and sometimes even dividend reinvestment options.
Sounds interesting. But are there any downsides?
Well, you usually need to buy in specific increments, and selling can sometimes be less convenient than through a broker.
That makes sense. So it's good for long-term slow and steady investing?
Precisely. It's a good way to build a position in a company you believe in without constant trading. Understanding the implications of a credit inquiry.
I checked my credit report and saw several credit inquiries. Should I be worried?
Credit inquiries happen when lenders check your credit history to assess your creditworthiness.
So are they always bad?
There are two types: hard inquiries and soft inquiries. Hard inquiries, which occur when you apply for credit, can slightly lower your score. Soft inquiries, like when you check your own credit or when a company pre-approves you for a credit card, don't affect your score.
How many hard inquiries are too many?
It depends, but generally, too many hard inquiries in a short period can signal to lenders that you're desperate for credit, which can lower your score.
Okay, so I should be mindful of how often I'm applying for credit.
Exactly. Space out your applications and avoid applying for multiple credit cards at once.
Understanding the implications of co-signing a loan.
My friend asked me to co-sign a loan for them. I'm not sure what to do.
Co-signing a loan means you're agreeing to be responsible for the debt if the borrower defaults.
So if they can't pay, I have to?
Exactly. The lender will come after you for the payments.
What are the risks involved?
It can damage your credit score if the borrower misses payments or defaults. It can also limit your ability to get loans for yourself.
Wow, that's serious. It sounds like I should only co-sign if I'm absolutely sure the borrower can repay the loan.
Exactly. Treat it as if it were your own loan, and consider the potential impact on your relationship with the borrower if things go wrong.
Understanding the purpose of a power of attorney.
I've been hearing about power of attorney. What exactly is it?
Power of attorney is a legal document that gives someone else the authority to act on your behalf.
In what kind of situations would someone need one?
It's often used when someone is unable to manage their own affairs due to illness, injury, or absence.
So, it could be used to manage my finances if I were incapacitated?
Yes, a financial power of attorney allows your designated agent to handle your banking, investments, and other financial matters.
That's good to know. It sounds like an important part of estate planning.
It is. It's important to choose someone you trust and to clearly define the scope of their authority in the document.
Understanding the role of a credit union.
I'm thinking of switching banks. I've heard good things about credit unions. Credit unions are member-owned nonprofit financial cooperatives. So, how are they different from traditional banks? They typically offer lower fees, better interest rates on savings accounts, and a more personalized service. What's the catch? Are there any drawbacks? Their membership is usually restricted to certain groups, like employees of a company or residents of a specific area. Also, they may have fewer branches or ATMs than larger banks. Ah, I see. I'll need to check if I'm eligible for membership and if their services meet my needs. Exactly. It's worth comparing the pros and cons.
Analyzing the impact of a credit score on loan approval.
I'm worried about getting approved for a car loan. My credit score isn't perfect.
Your credit score plays a significant role in loan approval. A lower score indicates higher risk to lenders.
What score is considered good enough?
Generally, anything above 700 is considered good, and over 750 is excellent. But even with a lower score, you might still get approved, just with a higher interest rate.
So a lower score means I'll pay more in interest?
Exactly. Lenders use your score to determine the interest rate they offer. The higher the risk, the higher the rate.
That makes sense. I should probably focus on improving my score before applying. Analyzing the impact of taxes on investment returns.
I'm starting to invest, but I'm confused about how taxes affect my returns.
Taxes can significantly reduce your investment gains. Different investments are taxed differently.
Like what kind of differences?
Capital gains, dividends, and interest income are all taxed. The rate depends on your income and how long you held the investment.
So, short-term investments are taxed differently than long-term ones?
Yes, short-term capital gains, held for less than a year, are taxed at your ordinary income tax rate, which is usually higher than the long-term capital gains rate.
Are there any ways to minimize the tax impact?
Consider investing in tax-advantage accounts like 401ks or IRAs. They offer tax benefits either now or in retirement.
Discussing the benefits of a credit union. I've been hearing a lot about credit unions lately. What are the main benefits compared to a traditional bank?
Generally, credit unions offer better interest rates on savings and loans because they are member-owned, nonprofit organizations.
So, I'd potentially earn more on my savings and pay less on a loan.
Potentially, yes. They also often have lower fees than banks.
Are there any downsides?
Sometimes they have fewer branches or ATMs than larger banks, and you usually need to meet specific membership criteria.
Okay, that's good to know. I'll look into the membership requirements.
Definitely worth checking out. The personalized service is often a plus, too.
Discussing the implications of taking out a payday loan.
I'm a little short on cash this month, and I'm thinking about taking out a payday loan.
Payday loans can be very expensive. Have you considered other options?
Like what?
They typically have extremely high interest rates and fees. It can be difficult to repay them, leading to a cycle of debt.
Really? I thought they were just a short-term solution.
They are, but the high costs often make them a bad choice. Look into alternatives like borrowing from family or friends, or negotiating a payment plan with your creditors.
That's good advice. I'll definitely explore those options first.
Evaluating the costs and benefits of a balance transfer. I'm thinking about doing a balance transfer to a new credit card with a 0% introductory APR.
That can be a good strategy to save on interest, but be sure to read the fine print.
What should I look out for?
Check the balance transfer fee. It's usually a percentage of the amount you're transferring. Also, note how long the 0% APR lasts.
And what happens after the introductory period ends?
The interest rate will likely jump to a much higher rate. Make sure you can pay off the balance before that happens.
Okay, so it's only worth it if I can pay it off quickly?
Exactly. Otherwise, the fees and eventual higher interest might outweigh the initial savings.
Understanding fixed versus variable rate loans.
I'm considering a home improvement loan, but I'm not sure whether to go for a fixed or variable interest rate.
That's a good question. A fixed rate stays the same for the life of the loan, offering predictability.
And a variable rate?
It fluctuates with market interest rates. It could be lower initially, but also increase over time.
So if rates go up, I'd be paying more?
Exactly. Variable rates carry that risk. Consider your risk tolerance and how long you plan to keep the loan.
That makes sense. I think I prefer the security of a fixed rate then.
Understanding the implications of co-signing a loan.
My friend asked me to co-sign a loan for them. I'm hesitant, but I want to help.
Co-signing a loan is a big responsibility. You're essentially guaranteeing the loan.
What does that mean exactly?
If your friend can't repay the loan, you're legally obligated to pay it back.
Even if I didn't benefit from the loan?
Yes, that's the risk. It can also affect your credit score if your friend misses payments.
So it's like taking out the loan myself?
In terms of responsibility, yes. Only co-sign if you're absolutely sure your friend can repay the loan and you're willing to take on that risk.
Understanding the purpose of a 401k match.
My company offers a 401k match. What exactly does that mean?
It means your employer will contribute a certain amount to your 401k account based on how much you contribute.
So it's like free money?
Essentially, yes. It's a huge benefit. For example, they might match 50% of your contributions up to a certain percentage of your salary.
Wow, that sounds great. Is there a catch?
There might be a vesting period. This means you need to work for the company for a certain amount of time to fully own the matched funds.
Okay, I see. I should definitely take advantage of that.
Absolutely. It's one of the best ways to save for retirement.
Understanding the risks of investing in penny stocks.
I've been seeing penny stocks advertised online. They seem like a quick way to make money.
Penny stocks can be very risky. They're often from small, unproven companies.
Risky how?
They're highly volatile and susceptible to manipulation. You could lose your entire investment quickly.
So it's not like investing in established companies?
Not at all. There's much less information available about them, making it hard to assess their true value.
I see. So it's more like gambling than investing?
For many, that's a fair comparison. Proceed with extreme caution, if at all.
Understanding the role of a fiduciary financial advisor.
I'm thinking of hiring a financial advisor, but I'm not sure what to look for.
Make sure they're a fiduciary. That means they're legally obligated to act in your best interest.
What's the difference if they're not a fiduciary?
They might recommend investments that benefit them more than you, even if it's not the best choice for your financial goals.
So a fiduciary is legally required to put my needs first?
Yes, that's the key difference. It provides a layer of protection and ensures they're working for you.
That makes a huge difference. How can I tell if someone is a fiduciary?
Discussing loan pre-approval.
I'm thinking of buying a house. Should I get pre-approved for a mortgage first? Absolutely. Getting pre-approved is a crucial first step. It gives you a clear idea of how much you can afford. How does pre-approval work? You'll submit your financial information to a lender, and they'll assess your creditworthiness and determine the loan amount they're willing to offer. Does it guarantee I'll get the loan? Not necessarily, but it strengthens your offer when you find a house. It shows sellers you're a serious buyer. Okay, that's helpful. I'll start looking into pre-approval.
Discussing the process of filing taxes as a freelancer.
I'm starting to freelance. I'm worried about doing my taxes correctly.
Freelancing taxes can be a bit more complex. You'll need to pay self-employment taxes, which cover both Social Security and Medicare.
Oh, so I'm responsible for both the employer and employee portions?
Exactly. But you can also deduct business expenses, which can help lower your taxable income.
What kind of expenses can I deduct?
Things like home office expenses, software subscriptions, and travel expenses related to your work.
That's good to know. Should I hire an accountant?
If you're unsure, it's a good idea, especially in your first year. They can help you maximize your deductions and avoid mistakes.
Exploring options for debt consolidation.
I'm struggling to keep track of all my different debts. I've heard about debt consolidation. What is it?
Debt consolidation combines multiple debts into a single loan, often with a lower interest rate or a more manageable payment schedule.
What are my options for consolidating debt?
You could consider a personal loan, a balance transfer to a credit card, or a debt management plan through a credit counseling agency.
Which option is usually the best?
It depends on your individual circumstances. A personal loan might offer a fixed interest rate, while a balance transfer could have a 0% introductory period. A debt management plan usually involves working with a counselor to negotiate lower interest rates with your creditors.
Okay, I need to research each option and see which one fits my needs best.
Navigating the process of closing a bank account.
I'm thinking of switching banks. What's involved in closing my current account?
It's usually pretty straightforward. First, make sure all your outstanding checks have cleared and any automatic payments are switched over.
Good point about the automatic payments. I hadn't thought of that.
Then, you'll need to formally request the closure, usually in writing or in person at the branch.
Do they usually charge a fee for closing an account?
Most banks don't, but it's always best to check their fee schedule just in case.
Okay, and what happens to the remaining balance?
They'll either give you a check or transfer it to another account, depending on your preference.
Negotiating credit card APR.
I've had my credit card for a while, and my APR seems high. Can I negotiate it? It's definitely worth a try. Start by checking your credit score. A good score gives you more leverage. My credit score is pretty good, over 750. Great. Call your credit card company and politely explain that you've been a loyal customer with a good payment history. What should I say specifically? Mention that you've seen lower APR offers from other companies and are considering switching if they can't lower your rate. Okay, I'll try that. What if they say no? You can try asking to speak to a supervisor or consider transferring your balance to a card with a lower APR.
Requesting a fee waiver.
I got charged an overdraft fee on my checking account. Is there any way to get it waived?
It's worth a try to request a fee waiver. Call your bank's customer service and explain the situation.
What should I say?
Be polite and explain that it was an honest mistake. If you're a longtime customer with a good history, they're more likely to grant a waiver.
Okay, I've been with them for years and rarely overdraft.
Mention that. Also, ask if they can set up overdraft protection to prevent future occurrences.
Good idea. Thanks for the advice.
Understanding CD early withdrawal penalties. I'm thinking about putting some money in a CD, but what happens if I need the money before it matures?
You can withdraw the money, but you'll likely face an early withdrawal penalty.
How much is that penalty? Usually.
It varies, but it's often a few months' worth of interest. Check the terms of the CD before you invest.
So I could potentially lose some of the principal I invested?
In some cases, yes, especially if you withdraw the money very early in the term. The penalty could exceed the interest earned.
That's a good thing to keep in mind. I should only invest money I won't need for a while.
Understanding credit card balance transfers.
I keep hearing about balance transfers. What exactly are they?
A balance transfer is when you move debt from one credit card to another, usually to take advantage of a lower interest rate.
So I can potentially save money on interest charges?
Exactly. Many cards offer introductory 0% APR periods for balance transfers.
Are there any downsides?
Yes, there's often a balance transfer fee, usually a percentage of the amount transferred. Also, make sure you pay off the balance before the introductory period ends, or the interest rate will jump.
That makes sense. I need to do the math and see if it's worth it.
Understanding the benefits and risks of margin trading.
I've heard about margin trading. It sounds like a way to make big profits quickly.
It can be, but it's also extremely risky. Margin trading involves borrowing money from your broker to increase your trading power.
So, I can potentially make more money with the same amount of capital?
Yes, but your losses are also magnified. If the investment goes against you, you could lose more than your initial investment.
That sounds pretty scary. What are some of the other risks?
You could face margin calls, where your broker demands you deposit more funds to cover potential losses. If you can't, they can sell your assets to cover the debt.
Wow, I think I'll stick to trading with my own money for now. Thanks for the warning. Understanding the importance of diversification.
I've been putting all my savings into one stock. Is that a bad idea?
Investing in a single stock is quite risky. Diversification is key to managing risk.
What does diversification mean exactly?
It means spreading your investments across different asset classes, like stocks, bonds, and real estate.
So if one investment does poorly, the others might offset the losses?
Exactly. It reduces the impact of any single investment's performance on your overall portfolio.
That makes a lot of sense. I should probably look into diversifying my portfolio then.
Analyzing the impact of a credit score on loan approval.
How important is my credit score when applying for a loan?
It's one of the most important factors. Lenders use it to assess your creditworthiness and determine the interest rate you'll receive.
So, a higher score means a better rate?
Generally, yes. A good credit score signals to lenders that you're a responsible borrower and less likely to default.
What if my score is low?
You might still be approved, but you'll likely face higher interest rates or require a cosigner.
Is there a specific score range I should aim for?
Aim for a score of 700 or higher to qualify for the best rates and terms. Over 740 is even better.
Analyzing the impact of debt consolidation.
I'm overwhelmed with debt. Is debt consolidation a good option?
It can simplify your finances by combining multiple debts into one loan with a single monthly payment.
Sounds easier to manage, but what's the catch?
You need to make sure the interest rate on the consolidation loan is lower than the average rate on your existing debts.
What if the interest rate is higher?
Then it might not be worth it, as you could end up paying more in the long run. Also, watch out for fees.
Are there different types of debt consolidation?
Yes, you can use a personal loan, a balance transfer credit card, or a home equity loan.
Discussing the benefits of a credit union.
I'm considering joining a credit union. What are the main advantages?
Generally, credit unions offer lower fees and better interest rates on savings accounts and loans.
Why is that?
They are not-for-profit and member-owned, so they prioritize member benefits over maximizing profits.
Are they as convenient as a big bank?
Some might have fewer branches or ATMs, but many offer online and mobile banking services that are comparable to larger banks.
Do I need to meet specific requirements to join?
Yes, usually you need to live, work, or attend school in a specific area, or be part of a particular organization.
Discussing the implications of a variable interest rate. I'm looking at a loan with a variable interest rate. What are the pros and cons?
The main pro is that your initial rate might be lower than a fixed-rate loan.
That sounds attractive. What's the catch?
The rate can increase over time, depending on market conditions. This could significantly increase your monthly payments.
So it's a gamble on interest rates staying low?
Essentially, yes. You need to be comfortable with the possibility of higher payments in the future.
That's a bit risky for my budget. I prefer predictability.
Then, a fixed-rate loan might be a better option for you, even if the initial rate is slightly higher.
Evaluating the risks and rewards of investing in real estate investment trusts, REITs. I'm thinking of diversifying my portfolio with REITs. What are your thoughts?
REITs can be a good option for income, as they distribute a large portion of their profits as dividends.
That's appealing. What are the risks involved?
They are sensitive to interest rate changes and economic downturns. Vacancy rates can also impact returns.
So economic conditions play a big role?
Absolutely. Also, REITs are taxed differently than other investments, which can affect your overall return.
Good to know. I'll need to research the specific REITs carefully.
Definitely. Consider the management team, the properties they own, and their debt levels.
Thanks for the insights. Understanding fixed versus variable rate loans.
What's the main difference between fixed and variable rate loans?
A fixed rate loan has an interest rate that stays the same for the entire loan term, while a variable rate can fluctuate.
So with a fixed rate, my payments will always be the same?
Exactly. That provides predictability and makes budgeting easier. But you might pay a slightly higher initial rate.
And a variable rate loan?
It could start lower, but it can increase if interest rates rise, potentially leading to higher payments.
Which one is generally better?
It depends on your risk tolerance and expectations for future interest rates. If you prefer certainty, go with fixed.
Understanding the benefits of direct stock purchase plans, DSPPs.
I've been hearing about direct stock purchase plans. Are they worth looking into? Definitely. DSPPs let you buy stock directly from the company, often skipping brokerage fees. So it's like cutting out the middleman? Exactly. Plus, some companies offer dividend reinvestment plans at no extra cost. That sounds good. Are there any downsides? Limited control over when you buy, and sometimes the purchase frequency is restricted. That's a fair trade-off for lower fees, I guess. Thanks for explaining. No problem. Do your research on the specific company's plan before investing.
Understanding the purpose of a 401k match.
My employer offers a 401k match. What exactly does that mean?
It means your employer contributes a certain percentage of your salary to your 401k account, up to a certain limit, when you contribute as well.
So, it's free money?
Essentially, yes. It's a fantastic benefit and a great way to boost your retirement savings.
Is there a catch?
You typically need to be vested to receive the full employer match. Vesting means you need to work for a certain period of time before you have full ownership.
How much should I contribute to get the full match?
That depends on your employer's specific plan. Check the details to see the maximum percentage they'll match.
Thanks. I'll definitely look into that.
Understanding the risks of investing in penny stocks. I've heard about people making quick money with penny stocks. Should I invest?
Penny stocks are extremely risky. They are shares of small companies that trade at very low prices.
What makes them so risky?
They're often illiquid, meaning it can be difficult to find buyers when you want to sell. Also, they are prone to manipulation.
Manipulation? How so?
People can artificially inflate the price through misleading information and then sell their shares for a profit, leaving others with losses.
That sounds like a scam.
It often is. Penny stocks are generally only suitable for very experienced investors with a high risk tolerance.
Understanding the role of a credit union. I've been hearing good things about credit unions. What makes them different from banks?
Credit unions are member-owned, not-for-profit financial institutions. Banks are for-profit and owned by shareholders.
So, who benefits from the profits?
At a credit union, the profits are returned to the members in the form of lower fees, better interest rates on loans and savings, and improved services.
That sounds appealing. Are there any limitations?
You usually need to meet specific membership requirements, like living or working in a certain area.
Are their services comparable to a bank?
Generally, yes. They offer checking and savings accounts, loans, credit cards, and other financial products.
I'll definitely look into joining one. Thanks.
Discussing the benefits of a health savings account, HSA.
I've heard about health savings accounts. Are they worth considering?
HSAs offer a triple tax advantage. Contributions are tax deductible, earnings grow tax-free, and withdrawals are tax-free when used for qualified medical expenses.
What are the eligibility requirements?
You need to be enrolled in a high-deductible health plan, HDHP, and not be covered by any other health insurance that isn't an HDHP. You also can't be enrolled in Medicare.
So, it's only for people with high deductibles?
Yes, but that high deductible comes with the benefit of being able to save for healthcare expenses with significant tax advantages. It can be a great tool for long-term healthcare planning.
That sounds interesting. I'll look into HDHPs.
Disputing a suspicious transaction.
Hello. I'm calling about a transaction on my debit card that I don't recognize.
Okay, I can help with that. Can you please provide your name and the last 4 digits of your card number?
It's John Smith, and the last four digits are 1234. The transaction was for $75 at a company called Unknown Online Store.
Okay, I see that transaction. Do you recognize that company at all?
No, not at all. I haven't made any purchases online recently that I don't remember.
All right, I'll file a dispute for that transaction. We'll investigate it, and you should receive a temporary credit within 10 business days.
Great, thank you. Should I cancel my card?
Yes, I recommend we cancel your current card and issue you a new one to prevent any further unauthorized charges. I'll take care of that now.
Negotiating a higher interest rate on a CD.
Good morning. I'm interested in opening a certificate of deposit, but I'm wondering if there's any flexibility on the advertised interest rate.
Good morning. We're happy to discuss that. While our rates are competitive, for larger deposits, we sometimes have some leeway. How much were you looking to deposit?
Around $50,000. I've seen slightly better rates elsewhere, but I prefer banking here.
Okay, let me check with my manager. That's a significant deposit. I'll see what we can do. One moment.
Thank you. I appreciate it.
All right, I spoke with them. We can offer you an additional 0.15% on the advertised rate for a 12-month CD.
That sounds much better. I'm happy to proceed.
Opening a business checking account. I'm starting a small business and need to open a business checking account.
Congratulations. We have several options for business checking accounts. What type of business are you running?
It's a sole proprietorship, a small online retail business.
Okay. We'll need your business name, address, tax ID, if you have one, and your personal information. We'll also need to verify your identity.
What are the key differences between your business checking accounts?
The main differences are the minimum balance requirements, transaction limits, and any associated fees. Some accounts also offer additional features like online bill pay and mobile deposit.
I'll review the options and decide which one fits my needs best.
Planning for college savings with a 529 plan.
We want to start saving for our child's college education. We've heard about 529 plans. Can you tell us more?
Certainly. A 529 plan is a tax-advantaged savings plan designed specifically for education expenses. Contributions grow tax-free, and withdrawals are also tax-free when used for qualified education expenses.
What qualifies as qualified education expenses?
That includes tuition, fees, books, supplies, and room and board at eligible educational institutions, generally any accredited college, university, or vocational school.
Are there different types of 529 plans?
Yes, there are two main types: savings plans and prepaid tuition plans. Savings plans are more flexible and allow you to invest in a variety of mutual funds or other investments.
And the prepaid plans?
Prepaid tuition plans allow you to purchase tuition credits at today's prices for use at participating colleges in the future. They're less common.
Securing a small business line of credit.
I'm interested in getting a small business line of credit for working capital. A line of credit can be a great tool for managing cash flow. We'll need to assess your business's financial health to determine your eligibility and credit limit. What kind of financial information do you need? We'll need your business's financial statements, including income statements, balance sheets, and cash flow statements. We'll also review your credit history and business plan. What are the interest rates typically like for a line of credit? Interest rates vary depending on your creditworthiness and the prevailing market rates. They're usually variable and tied to a benchmark rate like the prime rate. And what are the repayment terms? You'll typically make monthly payments covering the interest and a portion of the principal. The specific repayment terms will depend on the size of the line of credit and your agreement with the bank.
Understanding foreign exchange rates and fees.
I need to exchange some US dollars for euros. How does your exchange rate work?
Our exchange rates fluctuate based on the current market rate. We add a small margin to that rate to cover our costs. We'll show you the exact rate before you proceed.
Are there any other fees involved?
Yes, there's a transaction fee for foreign currency exchange. The fee varies depending on the amount you're exchanging. It's typically a percentage of the total amount.
Can I see a breakdown of the rate and fees before I commit?
Absolutely. We'll provide a complete breakdown of the exchange rate, the transaction fee, and the total amount you'll receive in euros before you finalize the transaction.
Great. That's exactly what I wanted to know.
Understanding the impact of inflation on savings.
I'm worried about inflation eroding the value of my savings. What can I do?
That's a valid concern. Inflation reduces the purchasing power of your money over time. To combat this, you need to ensure your savings are earning a return that outpaces inflation.
What are some options for that?
Consider investments that historically provide higher returns than savings accounts, such as stocks, bonds, or real estate. However, these investments also come with risks.
So it's a trade-off between risk and potential return?
Exactly. We can help you assess your risk tolerance and explore different investment options that align with your financial goals and time horizon. Diversification is also key.
Diversification? Meaning spreading my investments across different asset classes.
Yes, spreading your investments can help to reduce risk. We can discuss this further and create a personalized investment strategy for you.
Understanding the implications of A, HELOC.
I'm considering a HELOC, but I'm not entirely clear on the risks involved.
AHELOC, or Home Equity Line of Credit, allows you to borrow against the equity in your home. The biggest risk is that your home is used as collateral.
So if I can't repay, I could lose my house.
Exactly. It's crucial to ensure you can comfortably afford the repayments, especially with fluctuating interest rates. HELOCs often have variable rates.
Variable rates? That's concerning. How often do they change?
They typically adjust based on a benchmark rate, like the prime rate, and can change monthly or quarterly. We can show you historical rate fluctuations to give you a better idea.
That would be helpful. Thanks for explaining the potential downsides.
Understanding the process of refinancing a car loan.
I'm looking to refinance my car loan. What information do I need to provide?
To start, we'll need your current loan details, including the lender, interest rate, remaining balance, and loan term. We'll also need your personal information and proof of income.
What are the benefits of refinancing?
The main benefit is usually a lower interest rate, which can reduce your monthly payments and overall interest paid. It can also shorten or lengthen your loan term.
Are there any fees associated with refinancing?
Sometimes. There might be application fees, origination fees, or prepayment penalties from your current lender. We'll clearly outline any fees associated with our refinancing options.
Okay, that's good to know. I'll gather my loan information and get back to you.
Comparing different types of savings accounts.
I want to open a savings account, but I'm not sure which type is best.
There are a few options. Traditional savings accounts are the most common, but there are also high-yield savings accounts and money market accounts.
What's the difference?
High-yield accounts offer better interest rates, but they may have higher minimum balance requirements. Money market accounts often offer check-writing privileges and tiered interest rates.
So it depends on my savings goals and how much I plan to deposit.
Exactly. Consider your needs and compare the interest rates, fees, and features of each type of account.
Thanks. That helps me narrow it down.
Discussing the benefits of direct deposit.
I still get a paper paycheck. Is there any reason to switch to direct deposit? Absolutely. It's much more convenient and secure. How so? Your paycheck is automatically deposited into your bank account, so you don't have to worry about cashing it or losing it. That does sound easier. Are there any other advantages? Yes, you often get access to your funds faster, and it eliminates the risk of mail delays or theft. Okay, you've convinced me. I'll talk to my HR department about switching.
Exploring options for debt consolidation.
I'm struggling to keep track of all my debts and the different interest rates. It's overwhelming.
Have you considered debt consolidation? It might simplify things.
I've heard of it, but I don't really know how it works.
Basically, you take out a new loan to pay off all your existing debts, leaving you with just one monthly payment.
What are the different types of debt consolidation?
You could use a personal loan, a balance transfer credit card, or even a home equity loan, depending on your situation and credit score.
Are there any downsides to debt consolidation?
Yes, you need to be careful about interest rates and fees. Make sure the new loan actually saves you money in the long run.
Reviewing bank statements for fraud. I never really look at my bank statements. Is that a bad idea?
You should definitely review them regularly, even if it's just online. It's crucial for detecting fraud.
What am I looking for?
Unauthorized transactions, unfamiliar payees, incorrect amounts, or any activity you don't recognize.
What if I find something suspicious?
Contact your bank immediately. They can investigate the transaction and potentially reverse the charges.
Good to know. I'll start checking them more often. Understanding escrow accounts.
I'm buying a house and the lender mentioned an escrow account. What is that?
It's an account held by a third party, like your lender, to pay for property taxes and homeowners insurance.
So, I pay into it each month with my mortgage payment?
Exactly. Your monthly payment includes principal, interest, taxes, and insurance, often referred to as PTI.
Why do they do that?
It ensures that your property taxes and insurance are paid on time, protecting both you and the lender.
That's actually pretty convenient. One less thing to worry about.
Understanding loan pre-approval. I'm thinking about buying a house, but I'm not sure where to start.
The first thing you should do is get pre-approved for a mortgage. It'll give you a better idea of how much you can afford.
What exactly does pre-approval mean?
It's basically a lender's preliminary assessment of how much they're willing to lend you based on your financial information.
So they check my credit and income?
Exactly. They'll look at your credit history, income, debts, and assets to determine your credit worthiness.
And does pre-approval guarantee I'll get the loan?
Not necessarily. It's a strong indicator, but the final approval depends on the property appraisal and other factors.
Understanding mobile banking security.
I'm hesitant to use mobile banking. Is it really secure?
It can be as long as you take precautions. Banks invest heavily in security measures.
Like what kind of measures?
Encryption, multi-factor authentication, and fraud monitoring are common, but you also need to do your part.
What should I be doing?
Use a strong password, don't use public Wi-Fi, and keep your phone's operating system and banking app updated. Enable biometric login if available.
That makes sense. I'll keep that in mind.
Understanding the amortization schedule.
I just got a loan, and they gave me this amortization schedule. It looks complicated.
It shows how much of each payment goes towards principal and interest over the life of the loan.
So at the beginning, more goes to interest?
Yes, in the early years, a larger portion of your payment covers the interest. As you pay down the principal, more goes towards that.
Why is that?
Because interest is calculated on the outstanding principal balance. As the balance decreases, so does the interest charged.
Okay, I think I understand. So the schedule helps me see how quickly I'm paying off the loan.
Understanding the implications of a credit inquiry.
I keep getting offers for credit cards in the mail. Does applying for too many hurt my credit score? Yes. Each time you apply for credit, it triggers a credit inquiry, which can slightly lower your score. So I should avoid applying for too many at once? Definitely. Too many inquiries in a short period can signal to lenders that you're desperate for credit. Are all credit inquiries the same? There are hard inquiries, which affect your score, and soft inquiries, which don't. Checking your own credit report is a soft inquiry. Okay, I'll be more selective about applying for credit in the future.
Understanding the importance of a safety deposit box. I'm decluttering and found some old documents. Should I just shred them?
For really important documents, like your birth certificate or passport, you might consider a safety deposit box at the bank.
What's the point? Isn't my home safe enough?
A safety deposit box offers added security against fire, theft, and natural disasters. Plus, it's a secure place to store items you don't need immediate access to.
What kind of things should I keep in one?
Important legal documents, valuable jewelry, rare coins, or anything irreplaceable.
Are they expensive to rent?
The cost varies depending on the size, but it's generally quite affordable for the peace of mind it provides.
Analyzing the benefits of a high-yield checking account.
I saw an ad for a high-yield checking account. Is it worth switching?
Potentially, yes. They typically offer a much higher interest rate than traditional checking accounts.
What's the catch?
Often, they require you to meet certain criteria, like maintaining a minimum balance or making a certain number of debit card transactions per month.
Are the interest rates actually high enough to make a difference?
It depends on the specific account and how much money you keep in checking. But even a small increase can add up over time, especially compared to no interest at all.
I'll have to compare the terms and conditions. Analyzing the costs of a credit card cash advance.
I'm thinking about taking a cash advance on my credit card. Is that a good idea? Cash advances are generally not a good idea. They come with high fees and interest rates. How high are we talking? The interest rate is usually much higher than the purchase rate, and it starts accruing immediately. Plus, there's often a cash advance fee, usually a percentage of the amount borrowed. Are there any situations where it might be worth it? Only in a dire emergency, and if you have no other options. Even then, explore alternatives first, like borrowing from a friend or family member. Okay, I'll avoid it if possible.
Discussing loan prepayment penalties.
I'm considering paying off my loan early. Are there any penalties I should be aware of?
Some loans, especially mortgages, may have prepayment penalties. Check your loan agreement carefully.
What exactly is a prepayment penalty?
It's a fee the lender charges if you pay off the loan before a certain date. It's designed to compensate them for the lost interest income.
How can I find out if my loan has one?
It should be clearly stated in your loan documents. Look for a section about prepayment or early payoff.
If there is a penalty, is it still worth paying off the loan early?
It depends on the size of the penalty and how much you'll save in interest. Do the math to see if it makes financial sense. Discussing the use of a credit card for travel.
I'm planning a trip abroad. Should I use my credit card or debit card?
Credit cards generally offer better protection against fraud. Plus, many have travel rewards.
That's true, but what about foreign transaction fees?
That's a good consideration. Look for a credit card with no foreign transaction fees. Many travel-focused cards offer that.
Are there any other benefits to using a credit card while traveling?
Some offer travel insurance, rental car insurance, or even airport lounge access. Check your card's benefits guide.
Okay, I'll look into that. Thanks.
Evaluating a bank's security measures.
I'm concerned about the security of my bank account. What security measures should I look for in a bank?
Look for two-factor authentication for online access. This adds an extra layer of security beyond just your password.
What else?
Real-time fraud monitoring and alerts are crucial. The bank should notify you immediately of any suspicious activity.
Are there any physical security measures I should consider?
While less relevant for everyday banking, secure ATMs and well-lit branches are important. Also, FDIC insurance protects your deposits up to $250,000 per depositor per insured bank.
Good to know. Thanks for the information. Evaluating a mortgage prepayment strategy. I'm considering paying extra on my mortgage each month. Do you think it's a good idea?
It can be. It primarily depends on your financial goals and interest rate. What's your current rate?
It's 4.5%.
That's decent. Prepaying will definitely save you on interest over the life of the loan, and you'll own your home sooner.
But what about investing that extra money instead?
That's the other side of the coin. If you can consistently get a higher return than 4.5% after taxes through investments, that might be a better option.
So it's about comparing potential returns.
Exactly. And also considering your risk tolerance and how much you value the peace of mind of owning your home outright faster.
Understanding the impact of taxes on investment gains.
I made some money on my investments this year. How will taxes affect that?
It depends on the type of investment and how long you held it. Short-term gains are taxed at your ordinary income rate.
And long-term gains?
Long-term gains for assets held over a year are taxed at a lower rate, usually 0%, 15%, or 20%, depending on your income.
What about investments in tax-advantaged accounts like a 401k?
With a traditional 401k, you defer taxes until retirement when you withdraw the money. A Roth 401k is taxed up front, but withdrawals in retirement are tax-free.
So it's important to understand the tax implications of each investment?
Absolutely. It can significantly impact your overall returns. Understanding the purpose of a credit inquiry.
I checked my credit report and saw a new credit inquiry. What does that mean?
A credit inquiry means that a lender or other business has requested your credit report to assess your creditworthiness.
Is that bad?
It depends. There are hard inquiries and soft inquiries. Hard inquiries, which happen when you apply for credit, can slightly lower your score, especially if you have many in a short period.
What's a soft inquiry?
Soft inquiries are things like checking your own credit report or when a company pre-approves you for a credit card. They don't affect your score.
So, applying for multiple credit cards at once could hurt my score?
Yes, because each application results in a hard inquiry.
Understanding the risks of investing in penny stocks.
I've been hearing about penny stocks. They seem like a quick way to make money.
Penny stocks can be very risky. They are typically shares of small companies with limited trading volume.
What makes them so risky?
They can be easily manipulated, and it can be difficult to find reliable information about the companies. The price can fluctuate wildly.
So I could lose my entire investment?
Yes, that's a real possibility. They are highly speculative investments.
Maybe I should stick to more established companies. Understanding the terms of a car lease.
I'm thinking of leasing a car. What are some key things I should look for in the lease agreement?
Definitely pay attention to the mileage allowance. Exceeding it can result in hefty fees.
Good point. Anything else?
Check the lease term, usually 24 to 36 months, and the monthly payment, of course. Also, look at the acquisition fee and disposition fee.
Acquisition and disposition fees, what are those?
The acquisition fee is what they charge to initiate the lease, and the disposition fees charged at the end of the lease when you return the vehicle.
Are those negotiable?
Sometimes, yes. It's worth trying to negotiate them down. Also, check the early termination penalties. They can be quite steep.
Discussing loan prepayment options. I'm thinking about paying extra on my mortgage each month. What are my options for doing that?
You can make extra principal payments each month, which will shorten the loan term and save you interest. Or you can make a lump sum payment when you have extra cash.
Will the bank automatically adjust my monthly payment if I make extra payments?
Not usually. You need to specify that the extra amount should be applied to the principal. Otherwise, it might just be applied to future interest.
How do I make sure it goes towards the principal?
Contact your lender and ask them how to designate extra payments for principal reduction. They might have a specific form or process.
Okay, I'll do that. Thanks.
Evaluating a bank's security measures.
I'm thinking about switching banks. What kind of security measures should I look for? Strong security is crucial. Look for multi-factor authentication, fraud monitoring, and data encryption. What's multi-factor authentication? It means you need more than just a password to log in, like a code sent to your phone or email. Okay, that makes sense. What about fraud monitoring? The bank should actively monitor your account for suspicious activity and alert you to any potential fraud. Good to know. I'll make sure to ask about these things. Also, check if they have FDIC insurance to protect your deposits.
Planning for a car purchase.
I'm thinking of buying a new car. Should I pay cash, or is it better to finance it?
That depends on your financial situation. Paying cash avoids interest, but financing allows you to keep your savings for other investments or emergencies.
What if I have enough for a substantial down payment?
A larger down payment reduces the loan amount and potentially the interest rate. Compare the interest rate on the car loan to potential investment returns before deciding.
Good point. I hadn't thought about investment returns.
Also, check your credit score. A good credit score can get you a better interest rate on the loan.
Okay, I'll check that out. Thanks.
Questioning a bank service charge. I just noticed a weird service charge on my bank statement. I don't think I should be paying it.
The first step is to figure out what the charge is for. Call the bank and ask them to explain it.
What if they say it's valid, but I still don't agree?
Explain your situation calmly and politely. Sometimes they'll waive the fee as a courtesy, especially if you're a longtime customer.
And if they still refuse?
You can ask to speak to a supervisor. If that doesn't work, you can file a formal complaint with the bank or even with a consumer protection agency.
Okay, I'll try that. Thanks for the advice. Reviewing beneficiary designations. I was just thinking about my bank accounts and investments. Should I be regularly reviewing my beneficiary designations?
Absolutely. It's crucial to review and update your beneficiaries whenever there's a major life event, like a marriage, divorce, birth, or death.
Why is it so important?
Because your assets will be distributed according to those designations, regardless of your will. If your beneficiary is outdated, the wrong person could inherit your assets.
How often should I review them?
At least once a year, or whenever there's a significant change in your life. It's a simple but important step to ensure your wishes are followed.
Okay, I'll put that on my calendar. Thanks for the reminder.
Understanding CD rollover options.
My CD is maturing soon. What are my options for what to do with the money?
You have a few choices. You can withdraw the money, reinvest it in another CD, or roll it over into a new CD at the same bank.
What does rolling it over mean?
It means automatically reinvesting the principal and earned interest into a new CD. You'll usually have a grace period to decide if you want to do this or choose a different term.
Should I just automatically roll it over?
Not necessarily. Check the current interest rates offered by other banks and consider your financial goals. You might find a better rate elsewhere.
Okay, I'll shop around before deciding. Thanks.
Understanding credit card minimum payments.
I've been only paying the minimum on my credit card. It's convenient, but I'm starting to wonder if it's a good idea.
Paying only the minimum can be very costly in the long run. A large portion of the payment goes towards interest, and you'll take much longer to pay off the balance.
How much longer are we talking?
Potentially years, even decades, depending on the balance and interest rate. And you'll pay significantly more in interest overall.
So, what's the alternative?
Try to pay more than the minimum, even if it's just a little bit extra. Every bit helps reduce the principal and the amount of interest you accrue.
I'll try to budget for that. Thanks for the advice. Understanding loan prepayment penalties.
I'm considering paying off my loan early. Are there any downsides to doing that?
Potentially. Some loans have prepayment penalties, which are fees charged for paying off the loan before the agreed-upon schedule.
How can I find out if my loan has one?
Check your loan agreement. It should clearly state whether there's a prepayment penalty and how it's calculated.
What if there is a penalty?
Weigh the cost of the penalty against the interest you'll save by paying off the loan early. Sometimes it's still worth it, but not always.
Okay, I'll definitely look into that before making any decisions.
Understanding mobile banking security features.
I use my bank's mobile app all the time. Are there any security features I should be aware of?
Definitely. Make sure you're using a strong password and enabling biometric login, like fingerprint or facial recognition.
I already use a fingerprint. Is there anything else?
Check if the app has security alerts for suspicious activity. Also, be careful using public Wi-Fi as it's less secure. Use your mobile data instead.
Good point about the Wi-Fi. I hadn't thought of that.
And always keep your app updated to the latest version, as updates often include security patches.
Okay, I'll double check all of that. Thanks.
Understanding payment apps.
Hey, I've been seeing more people using these payment apps like Venmo and Zelle. Are they safe to use for larger transactions?
They're convenient, but safety depends. For smaller amounts, they're generally fine, especially with people you know. But for larger sums, there are risks.
What kind of risks?
Scams are common. Someone might claim to need money and then disappear. Also, some apps have transaction limits.
So what's the best practice?
Only use them with trusted individuals. Double-check the recipient's information and be wary of requests from strangers. For larger amounts, a bank transfer is usually safer.
That makes sense. Thanks for the heads up.
Analyzing recent market volatility.
This market volatility is unsettling. My portfolio seems to swing wildly every day. Yeah, I've noticed that too. It's mostly driven by inflation fears and interest rate hikes, I think. So what are you doing about it? Are you making any adjustments? I'm sticking to my long-term strategy. Trying not to panic sell, maybe rebalancing a bit. Rebalancing? What does that involve? Selling some of the assets that have performed well and buying more of the ones that haven't to maintain my target asset allocation. That makes sense. I should probably look into that. Thanks. No problem. Just remember to do your own research and consult a professional if you're unsure.
Discussing the ethics of high-frequency trading.
I was reading about high-frequency trading. It seems a bit unfair, doesn't it?
In what way? It's just using technology to trade faster, right?
But they have an advantage over regular investors. They can front-run orders and profit from tiny price discrepancies.
That's true. Some argue it adds liquidity to the market, making it more efficient overall.
But at whose expense? It feels like the small investor is at a disadvantage.
There's definitely a debate to be had. Regulations are trying to keep up, but it's a constant arms race.
I agree. It's important to understand how these practices affect the market as a whole.
Discussing the future of cash.
Do you think cash will eventually disappear?
It's definitely declining in use, especially with the rise of digital payments.
I hardly ever carry cash anymore. It's so much easier to use my phone.
But there are still situations where cash is useful, like small businesses or emergencies.
True. And what about people who don't have bank accounts or access to technology?
That's a major concern. A cashless society could exclude vulnerable populations.
So a balance is needed. Digital payments are convenient, but cash still has a role to play.
Discussing the impact of student loan forgiveness.
What do you think about the proposed student loan forgiveness program? It's a complex issue. On one hand, it could provide much-needed relief to borrowers. Exactly. Many people are struggling under the weight of student debt. But on the other hand, it raises questions about fairness to those who already paid off their loans or never took them out. And the potential impact on the national debt is a major concern. It's a tough balancing act between providing relief and being fiscally responsible. I agree. There are no easy answers.
Discussing the risks of investing in NFTs.
I've been hearing a lot about NFTs. Are they a good investment?
They're highly speculative, to say the least. The market is very volatile.
So there's a high risk of losing money?
Absolutely. The value of NFTs is based on hype and demand, which can disappear quickly.
What about the argument that they're a way to support artists?
That's true to some extent, but there are also concerns about scams and copyright infringement.
I see. It sounds like something to approach with extreme caution.
Definitely. Only invest what you can afford to lose and do thorough research.
Evaluating a new fintech app.
Have you heard about this new fintech app, Budget Buddy? It's supposed to automate your budgeting.
Oh yeah, I think I saw an ad for that. Is it any good?
I'm not sure. It claims to track your spending automatically and suggests savings opportunities.
Sounds convenient, but I'm always wary of giving apps access to my bank accounts.
That's a valid concern. I think they use bank-level encryption, but still.
I'd read the reviews carefully and check their security policies before linking anything.
Good point. I'll do some more research before I try it out.
Evaluating the costs and benefits of a financial advisor.
I'm thinking about hiring a financial advisor. Is it worth the cost?
It depends on your financial situation and goals. They can provide valuable guidance, but it comes at a price.
What kind of fees do they typically charge?
Some charge a percentage of assets under management, while others charge hourly or flat fees.
What are the benefits besides investment advice?
They can help with retirement planning, estate planning, and tax optimization.
So, it's a holistic approach.
Ideally, yes. But make sure you find a fiduciary advisor who's legally obligated to act in your best interest.
Navigating a sudden inheritance. I recently received an inheritance. I'm not sure what to do with it.
That's a significant event. First, take a deep breath and don't rush into any decisions.
Easier said than done. I feel overwhelmed.
Consider consulting a financial advisor. They can help you create a plan based on your goals and risk tolerance.
That's a good idea. Should I pay off debt first?
That depends on the interest rates on your debts. High interest debt should be a priority.
What about investing some of it?
Definitely explore investment options, but diversify, and don't put all your eggs in one basket.
Understanding the implications of a recession. Everyone's talking about a potential recession. What does that really mean for me?
It generally means a slowdown in economic activity, potentially leading to job losses and lower consumer spending.
So, should I be worried about my job?
It's always wise to be prepared. Review your budget and try to build up an emergency fund.
What about my investments? Should I sell everything?
That's usually not a good idea. Market downturns can be opportunities to buy, but it depends on your risk tolerance and investment horizon.
So stay calm and plan ahead.
Exactly. Focus on what you can control, like your spending and savings.
Understanding the role of credit rating agencies.
I'm confused about credit rating agencies. What exactly do they do?
They assess the creditworthiness of borrowers, like companies or governments, and assign them a rating.
So a higher rating means they're more likely to repay their debts?
Precisely. Investors use these ratings to gauge the risk of investing in their bonds.
Weren't they criticized for giving high ratings to risky mortgage-backed securities before the 2008 crisis?
Yes, that's a major point of contention. They've been accused of conflicts of interest and contributing to the crisis.
So their ratings aren't always reliable?
They're a useful tool, but investors should always do their own due diligence and not rely solely on credit ratings. Analyzing personal debt.
I'm starting to feel overwhelmed by my debt. I'm not sure where to start.
The first step is to analyze your debt. Make a list of all your debts, including the interest rates and minimum payments.
Okay, I can do that. Then what?
Prioritize which debts to tackle first. Generally, you want to focus on the ones with the highest interest rates, like credit card debt.
So pay those down as quickly as possible.
Exactly. There are different strategies, like the snowball method, smallest balance first, or the avalanche method, highest interest first. Choose what motivates you most.
I think I'd prefer the avalanche method. It sounds more efficient.
It usually is, financially speaking. Good luck.
Discussing the benefits of a cashback credit card. I'm thinking of getting a new credit card. I've been looking at cashback options.
Cashback cards can be great if you use them responsibly. What are you hoping to get out of it?
Mostly just to earn some money back on my regular spending. I pay my balance in full each month.
That's the key. Look for cards with good rewards on categories you spend the most on, like groceries or gas.
I saw one with 3% on groceries. That sounds pretty good.
It does. Just be sure to check for annual fees that might offset the rewards.
Good point. I always forget to factor those in. Thanks.
You're welcome. Happy spending. Responsibly. Discussing the benefits of a Roth IRA.
I've been hearing a lot about Roth IRAs. What are the main benefits?
The biggest advantage is that your withdrawals in retirement are tax-free.
Really? Even the earnings?
Yep, as long as you meet certain requirements like being over 59 and a half and having the account for at least 5 years.
That sounds amazing. What's the catch?
You contribute after-tax dollars. meaning you don't get a tax deduction in the year you contribute. Also, there are income limits to be eligible.
Income limits? I'll have to check those out, thanks.
You're welcome. It's a great tool for retirement savings if you qualify.
Discussing the pros and cons of peer-to-peer payment apps.
I use peer-to-peer payment apps all the time. They're so convenient.
They are handy, but I'm always a little worried about security.
What are your concerns?
Well, if someone hacks my account, they could access my linked bank account. Plus, scams are becoming more common.
That's true. I always double-check the recipient's name before sending money.
Smart. I also try to limit the amount of money I keep in the app itself.
Good idea. It's all about being cautious. Evaluating a bank's customer service. I'm thinking of switching banks. The customer service at my current bank is terrible.
That's a valid reason to switch. What kind of customer service issues are you experiencing?
Long wait times on the phone, unhelpful staff, and unresolved issues.
That sounds frustrating. Have you looked at online reviews for other banks?
I have, but I'm not sure how much to trust them.
True, but look for patterns. If multiple people mention the same issues, it's probably a red flag. Also consider how responsive the bank is to addressing negative reviews.
Good point. I'll pay closer attention to that. Thanks.
Understanding banking jargon.
I was reading my bank statement, and I came across some terms I don't understand. It's like they're speaking a different language.
Banking jargon can be confusing. What terms are you struggling with?
Well, what's APR versus APY?
APR is the annual percentage rate, the interest rate you pay on a loan or credit card. APY is the annual percentage yield, which includes the effect of compounding interest on savings accounts.
Okay. So APY is better for savings?
Yes, because it shows the actual return you'll earn after compounding.
That's helpful. What about FDIC insured?
That means your deposits are protected by the Federal Deposit Insurance Corporation up to $250,000 per depositor per insured bank.
Understanding fixed versus variable rate loans.
I'm trying to decide between a fixed rate and a variable rate loan. What's the difference?
A fixed-rate loan has the same interest rate for the entire loan term, while a variable-rate loan's interest rate can fluctuate based on market conditions.
So with a variable rate, my payments could go up or down.
Exactly. Fixed rate offers predictability, while variable rate might start lower but carries more risk.
Which one is better?
It depends on your risk tolerance and expectations for interest rates. If you think rates will stay low, a variable rate might save you money. But if you want certainty, a fixed rate is safer.
That makes sense. Thanks for explaining it. Understanding inflation's impact on investments.
I'm a bit worried about inflation. It seems like my investments aren't growing as much as I thought they would.
Yeah, inflation definitely eats into your returns. Are you factoring it in when you're looking at your investment growth?
I try to, but it's hard to predict. What strategies do you use to combat inflation's effect on your portfolio?
I diversify into assets that tend to do well during inflationary periods, like real estate or commodities.
That's a good idea. I've mostly stuck with stocks and bonds. Maybe I should consider other options.
It's worth researching. Also, consider inflation-protected securities like TIPS.
Tips? I'll look into those. Thanks for the advice.
No problem. Keeping ahead of inflation is key to long-term financial health.
Understanding the impact of a debt-to-income ratio.
I'm trying to improve my chances of getting approved for a loan. I heard my debt-to-income ratio is important.
Absolutely. Your debt-to-income ratio, DTI, is a key factor lenders consider.
What exactly is it?
It's the percentage of your gross monthly income that goes towards paying your monthly debts, including things like rent, mortgage, credit cards, and loans.
So lower is better?
Yes, a lower DTI indicates that you have more income available to repay the loan.
How do I lower my DTI?
You can either increase your income or decrease your debt. Paying down your debts is usually the most effective strategy.
Okay, I'll focus on paying down my credit cards. Thanks for the explanation.
Understanding the process of loan pre-qualification.
I'm thinking about buying a house, and I heard I should get pre-qualified for a mortgage first.
Definitely a good idea. Pre-qualification gives you a rough estimate of how much you can borrow.
What does the process involve?
We'll provide some basic financial information, like your income, debts, and assets.
And then they'll tell me how much I can borrow.
Roughly, yes. It's not a guarantee, but it gives you a good starting point.
Okay, that makes sense. Is it free to get pre-qualified?
Usually, yes, but always double-check to be sure.
Analyzing recent market volatility. The stock market has been so volatile lately. Should I be worried?
Volatility is normal. Don't panic sell. Review your investment strategy.
What does reviewing my strategy mean?
Assess your risk tolerance and time horizon. Are you investing for the long term?
Yes, mostly for retirement.
Then focus on the long-term picture. Short-term fluctuations are less significant.
Should I buy more when the market is down?
Dollar cost averaging can be a good strategy. Invest a fixed amount regularly, regardless of market conditions.
Choosing a bank account for a teenager.
My teenager needs a bank account. What should I look for?
Convenience and low fees are key. Consider a student account.
What's a student account offer?
Often no monthly fees and easier access to ATMs. Some even have educational resources.
That sounds perfect. Any specific features to prioritize?
Mobile banking app access is essential for teens. Also, check for parental controls.
Parental controls? That's interesting. I'll look into that. Thanks.
You're welcome. It can help them learn to manage money responsibly.
Discussing investment in bonds.
I'm thinking about diversifying my portfolio with bonds. What are the basics? Bonds are essentially loans you give to a government or corporation. They pay interest. Are they safer than stocks? Generally, yes, but returns are typically lower. Risk depends on the issuer's creditworthiness. How do I choose which bonds to invest in? Consider the maturity date, when the loan is repaid, and the credit rating. Higher rating, lower risk. Okay, maturity date and credit rating. Anything else? Think about your investment goals and time horizon. Bonds are good for stability.
Evaluating a bank's security measures. I'm worried about the security of my bank. What should I look for?
Strong password requirements, two-factor authentication, and fraud monitoring are crucial.
What is two-factor authentication?
It's an extra layer of security. You need something you know, password, and something you have, code from your phone.
That sounds much safer. Do most banks offer that?
Most reputable banks do. Also, check for FDIC insurance to protect your deposits.
FDIC insurance? What does that cover?
It insures your deposits up to $250,000 per depositor, per insured bank.
Questioning a bank service charge. I noticed a weird service charge on my account. Should I just ignore it?
Definitely not. Investigate it. It could be a mistake or even fraud.
How do I go about doing that?
First, check your account details online. See if it's a recurring charge you forgot about.
Good idea. What if I still don't recognize it?
Contact your bank immediately. Explain the situation and ask for clarification.
Okay, I'll call them tomorrow. Thanks for the advice.
You're welcome. Keep a record of your conversation with the bank.
Understanding bank statements.
I'm a bit confused about my bank statement. There are so many transactions listed.
Bank statements can be overwhelming. Are you looking at the online version or a paper statement?
The online version. It's easier to search, but harder to get an overview.
Start by identifying the income and expenses. See if they match your records.
Good idea. I'll check against my receipts and budget spreadsheet.
Pay close attention to any unfamiliar transactions. Report them immediately.
Definitely. That's my biggest fear, unauthorized charges. Thanks for the tip.
No problem. Banks usually have a process for disputing fraudulent activity.
Understanding credit card annual fees.
I got offered a new credit card, but it depends. Calculate if the rewards outweigh the fee. How do I do that? Estimate your spending and the rewards you'd earn. Subtract the annual fee. So, if the rewards are more than the fee, it's a good deal? Potentially. Also consider other benefits like travel insurance or purchase protection. Oh, I didn't think about those perks. I'll check the fine print. Exactly. And compare it to cards without annual fees too.
Understanding escrow accounts for property taxes and insurance.
I'm buying a house, and the lender mentioned an escrow account. What is that? It's an account your lender manages to pay your property taxes and homeowner's insurance. So I pay them the money, and they pay the bills? Exactly. They collect a portion of those costs with your monthly mortgage payment. Is it required? Often yes, especially if you put down less than 20% on your mortgage. What are the benefits? It helps you budget and ensures your taxes and insurance are paid on time, avoiding penalties.
Understanding loan prepayment options.
Want to pay off my loan faster? Are there any downsides to prepaying? Check for prepayment penalties. Some loans charge a fee for paying off early. How do I find out if my loan has that penalty? Review your loan agreement carefully. It should be stated there. Okay, I'll check. If there's no penalty, is it always a good idea to prepay? Usually, yes. You save on interest in the long run, but consider other investment options. What do you mean by other investment options? Make sure you're not sacrificing better investment returns to pay off the loan.
Understanding the impact of taxes on investments.
I'm starting to invest, but I'm confused about how taxes work.
Taxes can significantly impact your investment returns. It depends on the account type.
What are the different account types and their tax implications?
Taxable accounts, tax-deferred like a 401k, and tax-free like a Roth IRA.
So, Roth IRA is the best option?
It depends on your situation. Roth IRA contributions are taxed now, but withdrawals in retirement are tax-free.
What about a 401k?
401k contributions are often pre-tax, lowering your current income, but withdrawals are taxed in retirement.
Automated investing platforms.
Have you ever considered using an automated investing platform, like a robo-advisor?
I've heard of them, but I'm a little skeptical. Are they really effective?
They can be, especially for beginners. They typically use algorithms to manage your portfolio based on your risk tolerance.
So, less hands-on management required from me.
Exactly. They rebalance your portfolio automatically and can be a lower-cost alternative to traditional financial advisors.
That sounds interesting. What about the downsides?
You have less control over specific investment choices, and the algorithms might not always perform optimally in unpredictable markets.
Good point. I'll have to research the pros and cons more thoroughly.
Budgeting apps and tools.
I'm looking for a better way to manage my budget. Have you used any budgeting apps?
Yeah, I've tried a few. Mint and YNAB are popular.
What do you like about them?
They automatically track your spending and categorize it, which is really helpful for seeing where your money is going.
That sounds useful. Do they help you set goals?
Absolutely. You can set budgets for different categories and track your progress.
Okay, I'll check those out. Thanks for the recommendations.
Estate planning basics.
I know I should probably start thinking about estate planning, but it seems daunting.
It's important, even if you don't have a lot of assets. Start with a will.
What does a will do?
It specifies how you want your assets distributed after you die.
Okay, that makes sense. What about a power of attorney?
That allows someone you trust to make financial or medical decisions on your behalf if you're incapacitated.
So, it's not just about what happens after I'm gone?
Exactly. It's also about planning for potential incapacity during your lifetime. Protecting yourself from identity theft.
I'm worried about identity theft. What steps can I take to protect myself?
It's a valid concern. Start by regularly monitoring your credit reports.
How often should I do that?
You're entitled to a free report from each of the 3 major credit bureaus annually.
Okay, I'll look into that. Anything else?
Be cautious about sharing personal information online, use strong passwords, and consider freezing your credit.
Freezing my credit? What does that do?
It prevents new credit accounts from being opened in your name.
The impact of interest rates on debt.
These rising interest rates are really starting to affect my credit card bills.
Tell me about it. It's impacting everyone. The higher the rate, the more you pay in interest over time.
I'm trying to pay more than the minimum each month, but it's tough.
That's the right strategy. Even a little extra makes a difference. Have you considered balance transfers to a lower rate card?
I've thought about it, but I'm worried about the transfer fees.
Compare the fees to the long-term interest savings. Sometimes it's worth it.
Good point. I'll crunch the numbers.
The importance of emergency funds.
I'm trying to decide where to put extra money. Should I invest it or build an emergency fund?
Definitely prioritize the emergency fund first. It's your safety net.
How much should I aim for?
Ideally, 3 to 6 months worth of living expenses. It depends on your job security and risk tolerance.
That sounds like a lot.
It is, but it provides peace of mind and prevents you from going into debt when unexpected expenses arise.
That makes sense. Where should I keep it?
In a high-yield savings account that's easily accessible.
Understanding compound interest.
I keep hearing about compound interest. Can you explain it simply?
Sure, it's basically earning interest on your initial investment, plus the interest you've already earned.
So, interest on interest?
Exactly. Over time, it can significantly increase your returns.
Does it matter how often it compounds?
Yes. The more frequently it compounds, daily, monthly, annually, the faster your money grows.
So, starting early is crucial to take advantage of it, right?
Absolutely. Time is your biggest ally when it comes to compound interest.
Understanding credit utilization ratio. I'm trying to improve my credit score. I keep hearing about credit utilization. What is it?
It's the amount of credit you're using compared to your total available credit.
So, if I have a $1,000 limit and I'm using $300, my utilization is 30%?
Exactly. Experts recommend keeping it below 30%, ideally even lower.
Why is that?
High utilization makes you look like a riskier borrower.
Okay, so paying down my balances will help?
Definitely. Paying them down before the statement closing date can have a big impact.
Understanding cryptocurrency risks. I'm thinking about investing in cryptocurrency. What are your thoughts?
It's certainly a hot topic, but be aware of the significant risks involved.
Like what, specifically?
Extreme volatility. The price can fluctuate wildly in short periods.
That's true, I've seen that.
Also, the regulatory landscape is still developing, so there's uncertainty there, and scams are prevalent.
Scams, huh? I need to be extra careful then.
Definitely do your research, and only invest what you can afford to lose.
Understanding different types of insurance.
I'm overwhelmed by all the different types of insurance. Where do I even start? Well, start with the essentials. Health, auto, and homeowners or renters insurance. Okay, I have those. What about life insurance? That depends on your circumstances. If you have dependents, it's generally a good idea. What's the difference between term and whole life? Term life provides coverage for a specific period, while whole life is permanent and has a cash value component. So term life is usually cheaper. Yes, typically much cheaper, especially when you're younger.
Analyzing credit card rewards programs.
I'm trying to decide which credit card to get for the rewards program. It's overwhelming.
Yeah, they can be confusing. What are you hoping to get out of it? Cash back, travel points?
Ideally, travel points, but I'm not sure which card offers the best value.
Look closely at the redemption rates and any annual fees. Sometimes a free flight isn't really free.
Good point. And what about spending categories? Some cards offer bonuses for certain purchases.
Definitely check those. If you spend a lot on groceries, a card with a grocery bonus is a good bet.
Okay, I'll compare the redemption rates, fees, and spending categories. Thanks.
Analyzing the impact of tax-advantaged accounts.
I'm trying to optimize my finances. Are tax-advantaged accounts really worth it?
Definitely. They can significantly reduce your tax burden.
Like what accounts are you referring to?
401ks, IRAs, and HSAs are common examples. They offer either tax deductions now or tax-free growth later.
So it's a way to save on taxes while saving for the future?
Precisely. Maxing out your contributions, if possible, can be a smart financial move.
I need to research the contribution limits and rules for each account.
That's a good starting point, and consider your long-term financial goals.
Comparing different types of mortgages.
I'm looking into buying a house, but I'm confused about the different types of mortgages.
There are several options. Are you thinking of a fixed rate or adjustable rate mortgage?
I'm not sure. What are the pros and cons of each?
Fixed rate offers stability, while adjustable rate might start lower but can fluctuate.
What about FHA loans? I've heard about those.
FHA loans are government-backed and often easier to qualify for, but they require mortgage insurance.
Okay, I need to research the interest rates and fees for each type.
Definitely compare the total cost of the loan over its lifetime.
Discussing robo-advisors.
Have you ever considered using a robo-advisor for investing?
I've heard of them, but I'm a bit skeptical. Are they actually effective?
From what I understand, they're good for beginners because they automate the process based on your risk tolerance.
So, no human interaction at all.
Typically minimal. They use algorithms to manage your portfolio.
What about fees? Are they lower than traditional financial advisors?
Generally, yes, that's one of the main appeals. Lower overhead.
Interesting. I might look into it a bit more.
Discussing the benefits of index funds. I've heard a lot about index funds. Are they a good investment option?
They can be. They offer broad market exposure and typically have low expense ratios.
What does broad market exposure mean?
It means you're investing in a wide range of companies, which reduces risk.
So it's a more diversified investment?
Exactly, and because they passively track an index, the management fees are usually lower than actively managed funds.
That sounds appealing. I'll look into adding some to my portfolio.
Discussing the impact of student loan debt.
I'm starting to worry about my student loan debt. It feels overwhelming. I understand. It's a common concern. Have you looked into different repayment plans? I have, but I'm not sure which one is best for me. Income-driven repayment plans might be an option, especially if your income is low. What about loan forgiveness programs? Those exist, but they usually have strict eligibility requirements. public service work often qualifies. I'll research those options. Thanks for the advice.
Discussing the importance of a will. I know I should probably create a will, but it feels daunting.
It's important to have one, regardless of your age or wealth. It ensures your wishes are followed.
What happens if I don't have a will?
The state will determine how your assets are distributed, which might not be what you want.
So, a will allows me to specify who gets what.
Exactly. And you can also name a guardian for your children if you have any.
Okay, that makes it sound a lot more important. I should probably consult a lawyer.
That's a good idea. They can help you navigate the legal requirements. Understanding annuities.
I'm trying to understand annuities for retirement. Are they a good idea?
Annuities can provide a guaranteed income stream in retirement, but they're complex.
What are the different types?
There are fixed, variable, and indexed annuities, each with different levels of risk and return.
Are there any downsides?
High fees and surrender charges can be significant drawbacks. Also, the returns might not keep pace with inflation.
So, it's important to carefully weigh the pros and cons before investing?
Absolutely. Understand the terms and conditions thoroughly.
Understanding peer-to-peer lending.
I've been reading about peer-to-peer lending. Have you ever tried it?
I've heard of it, but I'm not entirely sure how it works.
Basically, you lend money to individuals or businesses through an online platform.
And what's the benefit compared to traditional lending?
Potentially higher returns than savings accounts, but also higher risk.
So there's a chance of losing my money if the borrower defaults.
Exactly. Diversification is key to mitigate that risk.
That makes sense. Sounds like something to research carefully. Understanding the stock market volatility.
The stock market has been so volatile lately. It's making me nervous about my investments. I know, it can be unsettling. But volatility is a normal part of the market cycle. Should I be selling everything? That depends on your investment goals and risk tolerance. For long-term investments, it's often best to ride it out. So don't panic sell. Panic selling can lock in losses. Consider consulting a financial advisor for personalized advice. That's a good idea. Thanks.
Analyzing personal debt.
I'm feeling overwhelmed by my debt. Where do I even start to analyze it?
First, list all your debts, credit cards, loans, everything. Include the interest rate and minimum payment for each.
Okay, I can do that. Then what?
Calculate your debt-to-income ratio. That's your total monthly debt payments divided by your gross monthly income.
What's a good debt-to-income ratio?
Ideally, below 36%. Above 43% is considered high and could indicate financial stress.
Okay, that's helpful. What should I do if my ratio is too high?
Prioritize paying down high-interest debt first. Consider debt consolidation or balance transfers to lower your interest rates.
Analyzing the costs of credit card cash advances.
I'm in a pinch and considering a cash advance on my credit card. Are they really as bad as everyone says?
Yes, they're generally a very expensive way to borrow money. They often come with high fees and interest rates.
How high are we talking?
Cash advance fees can be a percentage of the advance, often 3 to 5%, and the interest rates are typically higher than purchase rates. Plus, there's often no grace period.
No grace period? What does that mean?
It means interest starts accruing immediately, from the moment you take out the advance.
So it's better to avoid them if possible?
Absolutely. Explore other options first, like a personal loan or borrowing from friends or family. A cash advance should be a last resort.
Choosing a bank for travel.
I'm going abroad next month. Should I switch banks to avoid foreign transaction fees?
That's a good idea. Some banks offer cards with no foreign transaction fees. Check out Capital One or Charles Schwab.
Okay, I'll look into those. Are there any other things to consider for banking while traveling?
Yes, make sure your card is chip-enabled, and that you notify your bank of your travel dates to avoid your card being blocked.
Good point about the travel dates. Anything about ATMs?
Try to use ATMs within a bank branch to minimize risk and potential fees. Look for banks that partner with your current bank for fee-free withdrawals.
Thanks, that's really helpful. I'll start researching banks with those features.
You're welcome. Enjoy your trip.
Discussing the merits of dollar-cost averaging.
I'm nervous about investing a large sum of money all at once. I've heard about dollar-cost averaging. Is it a good idea?
Dollar-cost averaging involves investing a fixed amount of money at regular intervals, regardless of the asset's price.
So I'd invest the same amount every month, even if the price is high or low?
Exactly. This can help reduce the risk of investing at a market peak. You'll buy more shares when prices are low and fewer shares when prices are high.
Does it guarantee higher returns?
No, it doesn't guarantee higher returns, but it can reduce volatility and the impact of bad timing. Over the long term, lump sum investing often outperforms dollar cost averaging, but it can be psychologically easier.
That makes sense. It's more about managing risk and emotions.
Precisely. It can be a good strategy if you're risk-averse or unsure about market timing.
Evaluating a financial advisor.
I'm thinking about hiring a financial advisor. How do I know if they're trustworthy?
Look for a fee-only advisor. They're less likely to have conflicts of interest than commission-based advisors.
Fee only. Got it. What else should I ask them?
Ask about their qualifications, experience, and investment philosophy. Make sure it aligns with your goals.
What kind of certification should I look for?
CFP, Certified Financial Planner, is a good one. Also, ask them about their fiduciary duty.
Fiduciary duty? What's that?
It means they're legally obligated to act in your best interest.
Okay, that's important. Thanks for the advice.
Evaluating a home equity loan versus HELOC.
I'm considering borrowing against my home equity, but I'm not sure whether to get a home equity loan or HELOC.
A home equity loan gives you a lump sum with a fixed interest rate and fixed monthly payments over a set term.
And a HELOC?
A HELOC is a line of credit. You can borrow money as needed up to a certain limit during the draw period. Interest rates are usually variable.
So the main difference is the lump sum versus a line of credit.
Exactly. Also, HELOCs often have a draw period followed by a repayment period where you're only paying interest during the draw period.
Which one is generally better?
It depends on your needs. If you need a specific amount of money for a defined purpose, a home equity loan might be better. If you need flexibility, a HELOC could be a better choice.
Understanding bond yields. I'm hearing a lot about bond yields lately. Can you explain what they are?
Sure. A bond yield is the return an investor receives on a bond. It's expressed as a percentage of the bond's current market price.
So if a bond's price goes down, does the yield go up?
Exactly. There's an inverse relationship. When bond prices fall, yields rise, and vice versa.
What's a good yield to look for?
It depends on the type of bond, its credit rating, and the current interest rate environment. Compare it to similar bonds.
Are higher yields always better?
Not necessarily. Higher yields often come with higher risk. Lower-rated bonds offer higher yields to compensate for the increased risk of default.
Understanding CD laddering.
I heard about something called CD laddering. What exactly is it?
It's a strategy where you buy multiple CDs with different maturity dates to maximize interest and maintain liquidity.
So, how does that work in practice?
Let's say you have $5,000. You could buy 5 $1,000 CDs with maturities of 1, 2, 3, 4, and 5 years.
And when one matures, what happens?
You reinvest it in a new 5-year CD, keeping the ladder going. This gives you access to some funds each year while earning higher interest on longer-term CDs.
That makes sense. Is it a good strategy for everyone?
It's good for people who want a safe, predictable return on their savings and don't need immediate access to all their funds.
Understanding FDIC insurance.
I keep hearing about FDIC insurance. What does it actually cover?
FDIC insurance protects your deposits in case your bank fails. It's backed by the U.S. government.
What types of accounts are covered?
Checking accounts, savings accounts, money market deposit accounts, and CDs are generally covered.
Is there a limit to how much is insured?
Yes, the standard insurance amount is $250,000 per depositor per insured bank.
So, if I have more than $250,000, what should I do?
You can spread your money across multiple banks or structure your accounts in a way that maximizes coverage, like using joint accounts or trust accounts.
Understanding margin accounts.
I've been reading about margin accounts. They sound risky. What exactly are they?
A margin account allows you to borrow money from your brokerage to buy securities. You're essentially using leverage.
So I can buy more stock than I have cash for?
Yes, but it amplifies both your potential gains and losses. If the stock goes up, you make more. If it goes down, you lose more, and you're still responsible for paying back the loan with interest.
What's a margin call?
If the value of your investments falls below a certain level, the brokerage can issue a margin call, requiring you to deposit more funds or sell assets to cover the loan.
That sounds scary. Who should use a margin account?
It's generally only suitable for experienced investors who understand the risks and have a high tolerance for volatility. It's not for beginners.
Analyzing the costs associated with home equity loans.
I'm considering a home equity loan to renovate my kitchen. What are the costs involved?
Besides the interest rate, which is a major factor, you'll also likely encounter closing costs similar to those you paid when you bought your house.
Like what, specifically?
Appraisal fees, loan origination fees, title insurance, and possibly attorney fees. These can add up to a significant amount.
Are there any other hidden costs I should be aware of?
Prepayment penalties are something to watch out for. Some lenders charge a fee if you pay off the loan early.
Good to know. So it's important to factor in all these costs when comparing different loan offers.
Absolutely. Focus on the APR, annual percentage rate, which includes all fees and the interest rate, to get a true picture of the loan's cost.
Discussing the benefits of automatic bill payment.
I keep forgetting to pay some of my bills. Have you ever used automatic bill payment? Yes, it's a lifesaver. It automatically pays your bills on time, preventing late fees and potential damage to your credit score. How does it work? You link your bank account or credit card to your biller's website or app, and then set up the payment schedule. Is it safe? Generally, yes, as long as you're using reputable billers and secure websites. Monitor your accounts regularly for any unauthorized transactions. What if I need to cancel or change a payment? Most systems allow you to easily cancel or modify payments online, but it's important to do so before the payment is processed.
Discussing the merits of high-yield savings accounts.
I'm looking to maximize my savings. Have you heard much about high-yield savings accounts?
Definitely. They offer significantly higher interest rates compared to traditional savings accounts.
What are some things I should consider when choosing one?
Look at the APY, annual percentage yield, minimum balance requirements, and any fees associated with the account.
Are they typically FDIC insured, like regular savings accounts?
Yes, most reputable high-yield savings accounts are FDIC insured up to $250,000 per depositor, per insured bank.
That's reassuring. I'll start comparing rates and features online.
Great. Just be sure to read the fine print before opening an account.
Evaluating a bank's customer service. I'm thinking of switching banks. Customer service is really important to me. What should I look for?
Good question. Consider their accessibility. Do they have convenient branch locations or online chat support?
Online chat would be great. How else can I evaluate their service before becoming a customer?
Check online reviews to see what other customers are saying about their experiences. Look for patterns in the feedback.
That's a smart idea. Are there any specific questions I should ask when I contact them?
Ask about their response time to inquiries, their problem-solving skills, and whether they're willing to go the extra mile.
Okay, I'll try calling their customer service line and see how helpful they are.
Also, see if they offer personalized service, or if you're just treated like another number.
Evaluating the benefits of a credit union membership. I've heard good things about credit unions. What are the main benefits compared to a traditional bank?
Credit unions are member-owned, so they often offer lower interest rates on loans and higher interest rates on savings accounts.
That sounds appealing. Are there any drawbacks?
Their branch network might be smaller than a large national bank, and they may have stricter membership requirements.
What kind of membership requirements are we talking about?
It could be based on where you live, work, or your affiliation with a particular organization.
I see. I'll have to check if I qualify for any credit unions in my area.
Definitely worth looking into. They often have a stronger focus on customer service as well.
Managing unexpected medical bills. I just got a huge medical bill I wasn't expecting. I'm not sure how to handle it.
That's rough. Have you checked if your insurance covered everything they should have?
Not yet, that's my first step. But even if they did, the remaining amount is still significant.
Many hospitals offer payment plans or even financial assistance programs. It's worth looking into.
I didn't know that. I'll definitely ask them about payment options.
You could also consider using a health credit card if the interest rate is lower than other options.
Good point. I'll compare rates before making any decisions. Thanks for the advice.
No problem. Just remember to prioritize paying it off as quickly as possible to avoid accumulating more debt.
Understanding escrow accounts for property taxes and insurance.
I'm buying a house, and the lender mentioned an escrow account. What is that? An escrow account is a separate account held by your lender to pay your property taxes and homeowners insurance premiums. So I don't pay those directly? You do, but indirectly. You make monthly payments to the lender that include your mortgage payment plus a portion for taxes and insurance. The lender then pays those bills on your behalf. What are the benefits of having an escrow account? It ensures that your property taxes and insurance are always paid on time, preventing penalties and potential lapse in coverage. It also spreads out the cost over the year, making it easier to budget. Does the lender earn interest on the money in the escrow account? It depends on the state and the terms of your mortgage. Some states require lenders to pay interest on escrow accounts, while others don't.
Understanding the impact of debt consolidation.
I'm struggling to keep track of all my debts. Have you ever considered debt consolidation?
I have, and it can be helpful. It essentially combines multiple debts into one, ideally with a lower interest rate.
What are the pros and cons?
Pros: simpler payments, potentially lower interest, and a fixed repayment schedule. Cons: you might end up paying more in the long run if the repayment period is extended, and you need good credit to qualify for the best rates.
So, it's important to compare the total cost of the consolidated loan with my current debts?
Exactly. Calculate the total interest you'll pay over the life of the loan to see if it's truly beneficial.
That makes sense. I'll have to do some serious calculations before deciding.
Definitely shop around for the best rates and terms, and be wary of consolidation offers that seem too good to be true.
Understanding the process of estate valuation.
My aunt recently passed away, and I'm helping with her estate. I'm confused about the valuation process. Estate valuation involves determining the fair market value of all assets owned by the deceased at the time of their death. What kind of assets are we talking about? Everything from real estate and vehicles to bank accounts, stocks, bonds, and personal property like jewelry and art. How do you determine the value of these items? Real estate often requires a professional appraisal. Stocks and bonds are valued based on their market price on the date of death. Personal property may require a professional appraisal or an estimate based on comparable sales. Is this valuation important for tax purposes? Absolutely. The estate's value is used to determine if estate taxes are owed, and it also establishes the cost basis for any assets inherited by beneficiaries. Okay, I understand. So it's crucial to get accurate valuations.
Understanding the risks of payday loans.
I'm a little short on cash this month. I'm considering a payday loan.
Be very careful with those. They often come with incredibly high interest rates and fees.
How high are we talking?
The APR, annual percentage rate, can be in the triple digits, making it very difficult to repay on time.
So, what are the alternatives?
Explore options like borrowing from friends or family, negotiating a payment plan with your creditors, or getting a personal loan from a bank or credit union.
Those sound like much better options. I'll definitely look into those first.
Payday loans should really only be a last resort, due to the high cost and potential for a debt trap.
Analyzing the benefits of a credit union versus a bank.
I'm thinking about switching from a traditional bank to a credit union.
That's a good idea to explore. There are some key differences.
Like what?
Credit unions are member-owned, non-profit organizations, while banks are for-profit corporations.
So does that mean credit unions offer better rates?
Often, yes. Credit unions tend to offer lower loan rates and higher savings rates because they don't have to maximize profits for shareholders.
Are there any downsides to credit unions?
They might have fewer branches and ATMs than larger banks. Also, you usually need to meet specific membership requirements, like living or working in a certain area.
Comparing different types of bank accounts. I'm thinking of switching banks. There are so many different account types, though.
Yeah, it can be overwhelming. What are you looking for in a bank account?
Mostly just a place to keep my money safe and easily accessible.
Then a basic checking account might be sufficient, but consider whether you want to earn interest on your balance.
Interest would be nice. So a savings account?
Savings accounts generally offer higher interest rates than checking accounts, but there might be limits on the number of withdrawals you can make per month.
Are there any other options?
Money market accounts offer a blend of features with potentially higher interest rates than savings accounts and more flexibility than CDs, but often require higher minimum balances.
Discussing the process of filing taxes as a freelancer. I started freelancing this year, and I'm dreading tax season. It seems much more complicated than when I was an employee.
Yeah, it's a bit different. The biggest change is that you're responsible for paying both the employer and employee portions of Social Security and Medicare taxes, known as self-employment tax.
Ouch. Is there anything good about it?
Definitely. You can deduct many business expenses, which can significantly reduce your taxable income. Keep meticulous records of everything you spend on your freelance work.
Like what kind of expenses?
Things like office supplies, software, internet and phone bills, portion used for business, travel expenses, and even a portion of your home if you have a dedicated home office.
So I need to keep all my receipts?
Absolutely. It's also a good idea to pay estimated taxes quarterly to avoid penalties at the end of the year. The IRS has guidelines on how to calculate and pay estimated taxes.
Managing investment risk tolerance.
I'm thinking about investing more aggressively, but I'm also worried about losing money. That's understandable. Have you assessed your risk tolerance? Not really. What does that involve? It's about figuring out how much risk you're comfortable taking, considering your financial goals and time horizon. So if I'm saving for retirement in 30 years, I can take more risk than if I need the money in 5 years? Exactly. A longer time horizon usually allows for more aggressive investments that can recover from short-term losses. Okay, that makes sense. Where do I even start figuring out my risk tolerance? Many financial institutions have questionnaires that can help you assess your risk tolerance. They consider factors like your age, income, and investment experience.
Navigating the process of closing a bank account.
I'm planning to close my old bank account, but I'm not sure where to start.
Closing a bank account is usually pretty straightforward. First, make sure you've moved all your funds to your new account.
Okay, I've done that. What's next?
You'll need to contact your bank and request to close the account. Some banks allow you to do this online, while others require you to visit a branch or send a written request.
Do I need to provide a reason for closing it?
Not necessarily, but they might ask for feedback. Also, be sure to cancel any automatic payments or direct deposits linked to the account.
That's a good point. I almost forgot about those.
And finally, request a written confirmation that the account has been closed. This will help you avoid any future issues.
Understanding secured versus unsecured loans.
I'm trying to figure out the best way to finance a new car.
Have you considered the difference between secured and unsecured loans?
I've heard the terms, but I'm not sure I fully understand.
A secured loan is backed by collateral, like your car. If you can't repay the loan, the lender can seize the asset.
So, a car loan is a secured loan?
Yes, exactly. An unsecured loan, on the other hand, isn't backed by any specific asset. Credit cards and personal loans are often unsecured.
Does that mean unsecured loans are riskier for the lender?
Yes, and that's why they often come with higher interest rates than secured loans.
Understanding the benefits and risks of margin trading.
I've heard about margin trading, and it sounds like a way to amplify my returns, but it also seems risky. You're right, margin trading can be a double-edged sword. It involves borrowing money from your broker to invest more than you otherwise could. So if the investment goes up, I make more money. Yes, your profits are amplified. But if the investment goes down, your losses are also amplified. And you're still responsible for repaying the borrowed funds plus interest. What happens if I lose too much money? Your broker could issue a margin call, requiring you to deposit more funds into your account to cover the losses. If you can't meet the margin call, they can sell your investments to cover the debt. That sounds pretty scary. It is. Margin trading is only suitable for experienced investors who understand the risks and have a high risk tolerance. It is not for beginners.
Understanding the impact of taxes on investments.
I'm starting to see some returns on my investments, but I'm worried about the tax implications.
That's a valid concern. Taxes can significantly impact your investment gains.
What kind of taxes are we talking about?
Primarily capital gains taxes, which are levied on the profit you make when you sell an investment for more than you bought it for. Also, dividends are usually taxable.
Are there ways to minimize these taxes?
Yes, holding investments for over a year qualifies them for lower long-term capital gains tax rates. Also, investing through tax-advantaged accounts like 401ks or IRAs can help defer or eliminate taxes.
So a 401k would be better than just a regular brokerage account in terms of taxes?
In most cases, yes, especially if you're eligible for employer matching contributions. But it depends on your individual circumstances.
Understanding the importance of diversification.
I've been investing in a single stock, and it's done really well, but I'm a bit nervous.
That's great that it's performing well, but concentrating all your investments in one place can be risky. Have you considered diversification?
Diversification? What does that involve?
It's about spreading your investments across different asset classes, industries, and geographic regions to reduce risk.
So instead of just one stock, I should invest in multiple stocks?
Exactly. And even beyond stocks. Consider bonds, real estate, or even international investments. The idea is that if one investment performs poorly, others might offset the losses.
That makes sense. It's like not putting all your eggs in one basket.
Precisely. Diversification doesn't guarantee profits, but it can significantly reduce the volatility of your portfolio.
Understanding the role of the Federal Reserve.
I keep hearing about the Federal Reserve in the news. What exactly do they do?
The Federal Reserve, or the Fed, is the central bank of the United States. It plays a crucial role in managing the economy.
How so?
One of its main responsibilities is setting monetary policy, which involves influencing interest rates and the money supply to promote economic stability.
So when they raise interest rates, that affects my loans?
Exactly. Higher interest rates can make borrowing more expensive, which can help to curb inflation. They also supervise and regulate banks.
So they're like a bank for banks?
In a way, yes. They provide financial services to banks and the government, and they also act as a lender of last resort during financial crises.
Discussing loan pre-approval. I'm planning to buy a car and want to get pre-approved for a loan first.
That's a good idea. It gives you a better idea of your budget and negotiating power.
What documents will I need to provide for the pre-approval process?
Typically, you'll need proof of income, such as pay stubs and your driver's license.
Okay, I can gather those. How long does pre-approval usually last?
Pre-approval usually lasts for 30 to 60 days, so plan accordingly.
Great, thanks for the information. Discussing the benefits of direct deposit.
My employer is switching to direct deposit. Is there any reason I shouldn't sign up?
Direct deposit is generally very convenient and secure. You get your money faster and don't have to worry about losing a paper check.
That sounds good. But what if there's a mistake with the deposit amount?
You can always contact your employer's payroll department or your bank to rectify any errors.
Okay, that's reassuring. And it's free, right?
Yes, direct deposit is typically free for both you and your employer.
All right, I'll sign up then. Thanks. Exploring options for debt consolidation.
I'm struggling with multiple debts and considering debt consolidation.
That can be a helpful strategy. Are you thinking of a personal loan or a balance transfer?
I'm not sure which is better. What are the pros and cons of each?
A personal loan offers a fixed interest rate and payment, while a balance transfer often has a promotional rate for a limited time.
So the balance transfer might be better if I can pay it off quickly?
Exactly. But if you need more time, a personal loan's predictability might be better.
That makes sense. I'll research both options further, thanks. Negotiating credit card APR. I've been a cardholder for 5 years and always pay on time. Is there any chance I could get a lower APR?
Let me check your account. I see your payment history is excellent. What APR are you hoping for?
I've seen offers for around 15%, and mine is currently at 20%.
Okay, I can lower it to 16.5%. How does that sound?
That's a good start. But is there any flexibility to get closer to 15%?
Let me see what I can do. I'll need to get approval from my supervisor. Please hold. Okay, good news. I can bring it down to 15.5%.
That's great. Thank you so much for your help.
Requesting a fee waiver.
I noticed a monthly maintenance fee on my account. I wasn't aware of this fee when I opened it.
I apologize for that. Let me review your account. It looks like you haven't met the minimum balance requirement this month.
Oh, I see. I've been a bit short lately. Is there any way you could waive the fee this time as a courtesy?
I can make a one-time exception for you, given your history with us. I'll waive the fee this month.
That's very kind of you. Thank you.
You're welcome. Just be mindful of the minimum balance in the future to avoid the fee.
I will definitely. Thanks again.
Understanding CD early withdrawal penalties.
I'm considering cashing out my CD early, but I'm worried about the penalty. I understand. The penalty for early withdrawal depends on the term of the CD. What term do you have? It's a 5-year CD. For a 5-year CD, the penalty is typically 6 months worth of interest. 6 months? That's a lot. Can you calculate how much that would be? Certainly. Based on your current balance and interest rate, the penalty would be approximately $300. Okay, thanks. That helps me decide if it's worth it.
Understanding credit card balance transfers. I'm thinking about doing a balance transfer to take advantage of a lower interest rate.
That can be a smart move. Are you aware of any balance transfer fees associated with the new card?
I think I saw something about a 3% fee.
Yes, that's common. so make sure the interest savings outweigh the initial fee.
Good point. And how long does the promotional rate usually last?
It varies, but often it's between 6 to 18 months. Read the fine print carefully.
Okay, I will. Thanks for the advice.
Understanding escrow accounts.
I'm buying a house and the lender mentioned an escrow account. What exactly is that?
An escrow account is where your lender holds funds to pay for your property taxes and homeowner's insurance.
So I pay extra each month towards those expenses?
Yes, your monthly mortgage payment will include principal, interest, taxes, and insurance, often abbreviated as PITI.
Why do they do that? Is it mandatory?
It ensures that your taxes and insurance are paid on time, protecting both you and the lender. It's often required if you put less than 20% down.
Okay, that makes sense. Thanks for explaining it.
Understanding mobile banking security.
I'm a bit hesitant to use mobile banking. I'm worried about security risks.
I understand your concern. Banks use multiple layers of security to protect your information on mobile apps.
Like what kind of security?
They use encryption, multi-factor authentication, and regular security updates.
What can I do to protect myself?
Use a strong password, avoid using public Wi-Fi for sensitive transactions, and keep your app updated.
Okay, that makes me feel a bit better. Thanks for the tips.
You're welcome. Always be cautious and report any suspicious activity immediately. Understanding the importance of a safety deposit box.
I'm thinking about renting a safety deposit box. What kind of things are typically stored in them?
People usually store important documents like birth certificates, deeds, and valuable collectibles.
Is it better than keeping those things at home in a safe?
It's generally considered more secure due to the bank's security measures and protection from fire and theft.
What happens if I lose the key?
You'll need to contact the bank and they'll drill the box open, usually with you present, for a fee.
Good to know. Thanks for the information. Comparing different types of savings accounts.
I want to open a new savings account, but I'm overwhelmed by the options.
There are several types, each with its own features. Consider your goals and how often you'll need access to the money.
Like what kinds of accounts?
Regular savings accounts offer easy access, but typically have lower interest rates. High-yield savings accounts offer better rates but may have minimum balance requirements.
What about money market accounts?
Money market accounts usually offer higher interest rates than regular savings accounts and might come with check writing privileges, but often require higher minimum balances.
So it's a trade-off between access and interest rates?
Exactly. Think about what's most important to you.
Discussing the benefits of a rewards credit card.
I'm thinking about getting a rewards credit card, but I'm not sure if it's worth it. Rewards cards can be great if you use them responsibly and pay your balance in full each month. What kind of rewards are we talking about? Cashback, travel points, and merchandise are common. Some cards offer bonus rewards for specific categories, like gas or groceries. Are there any downsides? Many rewards cards have higher interest rates than standard cards. If you carry a balance, the interest charges can quickly outweigh the rewards you earn. So it's only worth it if I pay in full every month? Exactly. Treat it like a debit card and only charge what you can afford to pay off.
Discussing the importance of regularly updating beneficiaries.
I was just reviewing my life insurance policy, and it made me think about beneficiaries.
It's crucial to keep your beneficiary designations up to date on all your financial accounts and insurance policies.
Why is that so important?
Life events like marriage, divorce, births, and deaths can significantly impact who you want to receive your assets.
I haven't updated mine in years, actually.
You should review them at least annually. If you've gone through any major life changes, it's especially important to update them promptly.
What happens if I don't?
Your assets might go to someone you no longer intend to receive them, or it could create legal complications for your loved ones.
Discussing the merits of fee-only financial advisors. I'm considering hiring a financial advisor, but I'm not sure how to choose one.
One important factor to consider is how they are compensated. Fee-only advisors are generally considered more objective.
What's the difference between fee-only and other types of advisors?
Fee-only advisors are paid directly by their clients for their advice. They don't receive commissions from selling financial products.
So they're not incentivized to recommend specific products?
Exactly. Their primary motivation is to provide advice that's in your best interest rather than to sell you something.
That sounds like a better arrangement.
It can be, but fee-only advisors may charge higher fees up front. It's important to compare the costs and services offered by different advisors before making a decision.
Reviewing bank statements for fraud. I try to review my bank statements regularly, but sometimes I feel like I'm just skimming them.
It's crucial to look closely for any unauthorized transactions. Even small, unfamiliar charges can be a sign of fraud.
What should I be looking for specifically?
Look for transactions you don't recognize, amounts that seem incorrect, or payments to vendors you don't use.
What if I find something suspicious?
Report it to your bank immediately. They'll investigate and can help you recover any lost funds.
Good point. I'll make sure to be more diligent from now on.
It's also a good idea to set up transaction alerts on your account so you are notified of any activity.
Understanding the amortization schedule.
I'm looking at my mortgage statement, and I'm a bit confused about the amortization schedule. It seems like I'm paying more interest than principal right now.
That's typical in the early years of a mortgage. An amortization schedule shows how much of each payment goes towards principal and interest over the life of the loan.
So, initially, most of my payment is interest.
Exactly. As you make more payments, the proportion shifts, and you'll pay more towards the principal.
Is there a way to speed up the process of paying off the principal?
Yes, you can make extra principal payments. Even small additional amounts can significantly reduce the loan term and overall interest paid.
That's good to know. I'll look into that. Thanks for explaining. Understanding the benefits of direct deposit. My new employer is pushing direct deposit, but I'm used to getting a paper check.
Direct deposit has several advantages. It's faster, safer, and more convenient than paper checks.
How is it faster?
Your paycheck is automatically deposited into your account on payday, so you don't have to wait for the mail or go to the bank.
And safer?
There's no risk of your check being lost or stolen in the mail.
That makes sense. I guess I should switch.
Definitely. Plus, many banks offer incentives for using direct deposit.
Understanding the implications of a credit inquiry.
I've been applying for a few credit cards lately, and I noticed my credit score dipped slightly.
That's likely due to the credit inquiries. Each time you apply for credit, it triggers an inquiry on your credit report.
So every application lowers my score?
Yes, but the impact is usually small, especially if you have a good credit history. However, multiple inquiries in a short period can raise a red flag.
Why is that?
Lenders might see it as a sign that you're desperate for credit or overextending yourself.
So I should space out my applications.
Definitely. Only apply for credit when you truly need it.
Understanding the implications of co-signing a loan. My friend asked me to co-sign a loan for them. I'm hesitant, but I want to help.
Co-signing a loan is a significant responsibility. You're essentially guaranteeing the loan.
What does that mean exactly?
If your friend defaults on the loan, you become responsible for repaying the entire debt, including interest and fees.
Even if they just miss a payment?
Yes, even a single missed payment can negatively impact your credit score and potentially lead to legal action against you.
That sounds risky.
It is. Only co-sign if you're prepared and able to repay the loan yourself if necessary. Understanding the purpose of a power of attorney.
My lawyer mentioned something about a power of attorney related to my finances. What exactly is that?
A power of attorney is a legal document that allows you to appoint someone to act on your behalf in financial matters.
So they can manage my bank accounts and investments?
Yes, within the scope you define in the document. You can grant them broad powers or limit their authority to specific tasks.
Why would I need one?
It's useful in case you become incapacitated or unable to manage your finances due to illness or travel.
Can I choose anyone?
You should choose someone you trust implicitly, as they will have access to your financial information and the ability to make decisions on your behalf.